Westwater sitting in for Chris from Chicago. Gentlemen, nothing's going on, so let's just have a quaint little conversation about what the ECB did last night, the jobs day that's coming up tomorrow. It's a quiet day in the markets here. Oh, wait, maybe not. Dylan, I'll go to you first. Obviously, we have to have a conversation here about what has just transpired in the last moments of the trading day. And we'll go to a chart of Tesla to give us some appropriate backdrop, just as soon as it loads here, for what we're about to discuss. Here we go. That's a fun little end of day right here. So just by way of background, I think you got
just for those who might be catching up.
Yes, just by way of background here.
Let me just read the pinned tweet at the top of Elon Musk's Twitter feed, which I think he's
if you would please.
220 million followers anyway.
Yes.
So 2 hours ago, Mr. Musk posted a pinned tweet at the top of his Twitter feed titled, "Is it time to create a new political party in America that actually represents the 80% in the middle? Yes or no?" So the headline, I would say, is Elon Musk has set out to create a new political party in America as of 2 hours ago, first of all.
Yeah.
Prior to that, Elon Musk said, time to drop the really big bomb. This is all on his Twitter feed. Donald Trump is in the Epstein files. That's the real reason they have not been made public. Have a nice day, DJT.
Spicy.
Something that gets said. Congress is spending America into bankruptcy. Not even those in Congress who had to vote on the big, ugly spending bill had time to read it. When I find another, there's some really good ones in here. I'm sorry for kill the bill. Anyway, so Elon Musk is an open Twitter war with the president of the United States, up to and including an activation to create a new political party that is neither Democrat or Republican, up to and including direct accusations that Donald Trump is associated with the most famous and horrifying pedophile ring in the history of America. And on the other side of the ledger, the president of the United States, a sophisticated and elegant and powerful man, is also on his Twitter feed, or whatever it is. He has his platform, I suppose.
He's on Truth Social, but before you say this next thing, I was just reloading his Truth Social page, and it appears to have gone down.
Okay.
Too many people trying to read.
And so,
yeah.
Trump basically, if I can find, I'm just looking at Twitter. I don't have a Truth Social feed.
I have.
So why don't you go ahead?
I have Truth Social in front of me here. So I'll read. If you see me looking down, this is me looking on my phone because I pulled this up moments ago before the page went down, and I haven't refreshed, so I can still see it. I'll read directly from the President of the United States. Elon was, quote, wearing thin. I asked him to leave. I took away his EV mandate that forced everyone to buy electric cars, capitalized, that nobody else wanted, that he knew for months I was going to do, and he went, all caps, crazy. Next, proposed the easiest way to save billions in our budget, billions and billions of dollars, all capitalized, is to terminate Elon's government subsidies and contracts. I was always surprised that Biden didn't do it.
The point,
that's the readout.
So the point is sort of beyond anybody's wildest dreams and or nightmares. Mm-hmm. The world's richest man who owns one of the most widely read media channels on earth, which is X or Twitter, is in an open, insult-laden, like a seventh grade, Ilya is a loser. Ilya's beard is stupid. And you're like, no, Italy is stupid. Dylan's haircut is too short, and he drinks too much espresso. Like, we're at the most idiotic level of interaction between what should be the two most sophisticated, competent individuals on earth. One, the world's richest man, the other, the president of the United States. They both collapse. Oh, the other key thing that's missing, I think that I'll paraphrase it, was a Musk comment, which was, if it wasn't for me, Donald Trump would never be the president of the United States. The only reason Donald Trump is the president of the United States is because of everything that I did, blah, 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 blah.
Yeah.
Anyway, so there's multiple pieces here. I think, one, there's this sort of titillation and entertainment of the absurdity of this, which is obviously something we're all going to both be horrified by and enjoy, like any like the world's best ever reality television show,
yes.
Like bickering bitches, basically. Okay, so we have two bickering bitches, but instead of being the Real Housewives of whatever, it's the president and the world's richest man. On the other hand, because it's the president and the world's richest man, and because the world's richest man not only has Twitter, he has the most significant and important electric vehicle company on earth. Whatever you think about Tesla, he has the most significant and important space exploration company on earth. And there's hundreds and
a huge piece of
the most advanced defense contractor and communications platform on Earth. So defense contractor, communication, space exploration, and EVs, and President of the United States. Fine.
Yeah.
Let's set aside the reality television show.
Sure.
This is a financial discussion at its heart. It's a financial network at its core.
Yes.
The chart tells a story. Tesla's down 14% today.
Yeah.
Trump, I think, actually came out point blank and said, "I'm going to F all of Elon's contracts."
He did.
The way that
he did.
What did he say? Do you know what he said?
So directly, his Truth Social page is back up. The quote I just read was, "The easiest way to save millions in our budget, billions and billions of dollars, is to terminate Elon's government subsidies and contracts." I was surprised that Biden didn't do it. The next post here, 7 minutes ago, "I don't mind Elon turning against me, but he should have done so months ago. This is one of the greatest bills ever presented to Congress." So the president has gone back to pushing his bill, but he very clearly just an hour ago threatens to cut off the Musk universe of companies from government dollars.
So this isn't just a reality show, it's a reality show being played with the world's most powerful economy. Anyway, with all the superlatives, you could reasonably assert, outside of maybe the president of China, outside of maybe the president of Russia, the two most powerful individuals on earth.
Yes.
Now in a 7th grade social media war. That is, what is the enterprise value of Tesla? Hundreds of billions of dollars. Yes.
Sure.
So the enterprise, what's 14% of Tesla? I don't know. It's got to be
a bunch of money.
A huge amount of money. So this makes me think. So much earlier in my career, I was assigned at Bloomberg for 7 consecutive years as a reporter to be the reporter covering what is called the World Economic Forum, which is an annual event in January. Many people know about it. In Switzerland, where there would be a big discussion and a meeting of many prime ministers, many presidents, many CEOs, important people.
The shorthand that people talk about that you may have heard is Davos this and Davos that.
Right.
This is that thing.
And so I was a member of that, a journalist covering that, a panelist in that, part of that for 7 years. And I was a young person. I started there probably for the first time when I was maybe 29 and I was in my mid to 36 or something. And the thing that really struck me, whether it was interacting with Tony Blair or Bill Clinton or Jamie Dimon for the first time when he was coming up at Smith Barney and all this, or other bank CEOs or other political leaders, heads of state, was how remarkably pedestrian, normal, and petty they were. And so I, as a younger person, really wanted to believe that people that were at the apex of power held themselves to a higher standard of elegance and grace, with that they thought about decision making in a way that transcended themselves. That I wouldn't make that just because if I'm the Prime Minister of England and Ilya or Thomas are the Prime Minister of France or the Chancellor of Germany, that I'm going to try to make decisions in the interest of England or in the interest of France. I'm not going to try to make decisions just because I think Ilya is funny looking, or because I think Thomas was mean to my son. But when I was in those rooms in Davos, it became shockingly apparent to me how gigantic decisions that affected many, entire nations, tax policies, et cetera, were actually being made on the regular for the most. I think Sean Penn said it really well recently, just in the past couple of days when they were talking about renaming the boats and whatever in the Navy. And he said that it's amazing to watch the Secretary of Defense go from being the most powerful man in the military to the chief petty officer. And to see
well done
how petty the decision-making was in the rooms in Davos and the impulses were, or to see how petty Donald Trump is, where he's wielding policy on the future of electric vehicles or on the future of space travel or on the future of cutting edge communications, or for that matter, how petty Elon Musk is, that he's willing to try to publicly humiliate and degrade and be hostile to. Elon Musk, 2 hours ago, set out to create a new political party in the United States. Full stop. Okay, open war with both political parties, which I, by the way, agree with. This is terrible for the world, and this is terrible for the U.S. market. Not because of any one thing that President Trump or Mr. Musk may or may not do, but rather because, and I think Tom really made this very clear on Truth or Skepticism yesterday, it pulls back the curtain on how tiny and how petty and how shitty the quality of the decision making is for things that are immensely consequential for the future of humanity. Not just for the future of America, but for the well-being of all Earthlings. And that the people that are elevated, whether we elevated them or they were elevated by virtue of corruption and conniving, but that elevation is not appreciated or respected by those who hold it, which is something that I've argued ever since I left mainstream cable news in 2012. One of the reasons I left is I've realized that, in my opinion, this whole thing is an unserious, insulting joke and it's a degradation of me as a human being for me to spend my time every day talking about these idiots as if what they were doing was well-intended or meaningful, because it's not. And sure, it's, you know what? I would buy Tesla on the dip, by the way. I would rather buy Tesla and short the whole market. I think this is terrible for the overall market situation, because I think it really degrades the perception or quality of all of American leadership and industry across the board. And at the same time, probably creates an opportunity for Tesla. Just on price extreme, because I think Tesla's going to get face pounded, because I think it'll go down probably again tomorrow, because a lot of people probably still don't even realize, most people are still not tracking on Twitter, or they're going to need to see the papers tomorrow and the morning television tomorrow and whatever. It's going to take 24 hours for what's happened in the last few hours to really spider into the entire sort of information system of the world. And what we're witnessing, despite the sort of minor titillation and entertainment that I might feel or anybody might feel in watching this is an American tragedy. You're watching the objective, catastrophic failure of duty to be a rational custodian of power. I mean, I think about how other executives, Tom Sosnoff, I myself am a CEO of multiple relatively small companies. I know many people that are responsible for larger organizations, and the degree to which every day when I make decisions, I'm trying to make decisions in what I think is in the best interests of the company and the best interests of the people that work at the company. How do I create opportunities for them? How do I help them contribute the most? Trying to think outside of my own personal self-interest on a day-to-day basis, and what is in the interest of the organization, the people in the organization. Or you can see that up the ladder. I've worked with Tom Sosnoff for more than a decade, as I just use him because I still work with him, and the degree to which Tom makes decisions in an interest in creating an environment, a culture, a system, the resources that may or may not be in the short term in Tom's best interest, but they're in the best interest of the organization over time, and Tom believes his best interest is served by having a healthy organization over time. And so to reach this level of power, President of the United States, world's richest man, or richest person, and to abandon any sense of responsibility for the best interest of the organization, whether the organization is the United States of America or whether the organization is Tesla, SpaceX, Twitter, whatever, is a tragedy. My only hope is that Tom, and he was really hopeful for this yesterday, I'm more skeptical. Tom's hope was that by exposing how horrendous these two people are, and this relationship between money and politics is sort of the consummation of something that's been developing for decades, this relationship between money and politics, that by exposing it at its absolute worst and most absurd, that it is the first real opportunity for meaningful reform to get money out of politics, maybe ever. Because with money in politics, you're doomed to have a character like Mr. Trump and a character like Mr. Musk both acquire power, which they, obviously are not qualified to have, and also now that they're by virtue of their lack of qualification to have the power, now we're going to have to watch them over the next few years degrade the United States, degrade themselves, degrade the U.S. dollar, and degrade really beautiful companies. I mean, think about how smart and how beautiful and how amazing the Tesla employees are.
I know some of them personally. Or the living in the Bay Area, I grew up with some of them. They're amazing people.
I've built businesses based on recruiting people who used to work at Tesla because Tesla was such a good magnet for talent that if you were good enough to work at Tesla, I literally set entire recruiting strategies for businesses based on find former Tesla engineers and hire them. Mm-hmm. And there are countless businesses, by the way, that are built to this day based on recruiting from these organizations, because these organizations have been the most elite magnets for the brightest minds in engineering for decades. And they are the ones that are getting punished for the idiocy of all this. Now, the silver lining, one might argue, is, okay, Trump is out from under the influence of Musk. Musk is a drug-addled freak show. Now Trump can do whatever he wants to do. One interpretation, a bunch of people have that. Other people say, well, no, Elon is going to finally break the two-party duopoly and create a viable third party in the United States, and then ultimately run a candidate based on that third party. So, I mean, there's an opportunity here to sort of look for silver linings in this. I would say that, the idea that Trump's going to get better is a far bridge to cross in terms of a silver lining. And it's probably not that much more rational to think that Elon Musk is going to be the right person to ultimately originate a meaningful third party. Although I think Musk has a better chance of creating a meaningful third party than Trump has of becoming some sort of super reliable, glorious president. But I think it's terrible for the U.S. dollar. I think it's terrible for the short-term U.S. markets. But I do think it's a buying opportunity for the Musk empire, specifically Tesla.
Thomas, I'm going to go to you in just a second. I just want to add two quick kind of historical asides here to put all of that in context. I think we need to definitely look at exactly the insights that Dylan has shared with us here. In particular, that the key takeaway for me here is that, as we've just learned from the back rooms of Davos, these people were always these people, but now we get to see them in plain sight.
Now you don't have to go to Davos to see that this is a clown show.
Yeah, and so if ever you were wondering if your leaders are human, they are indeed. And this is very dramatic kind of expose on that. So how much this is going to alter actual decision making, we'll see, because obviously they were always going to do what they were going to do. It's just now they're showing us that with no filter. And there is meaningful historical precedent. We've been here before. So FDR and the New Deal contingent fought with JP Morgan, who was, as a company and as a person, and as two people, really, the elder and the son, the kind of people that Elon Musk is now, sort of in the absence of a Fed, the people who you call to fix financial crises and things like this. So we've seen this before. We've also seen a schism on the right in the United States before, and that's really how you get the Republican Party becoming created. The right wing of its day, the Whig Party, splintered into a kind of nationalist, populist American party, then called, perhaps with some pejorative connotation, the Know-Nothings, and they went off and vanished over time. And of course, the right-wing opposition that splintered from them out of the Whig Party became the Abraham Lincoln Republicans that we know now. Sort of that was the genesis of the party as we know it here. So we've seen this movie. This has happened before. So it's not clear to me that Elon Musk is going to start a completely third party, but that there is a schism on the right, and where one half is kind of this nationalist populist thing and the other side is not that. This has happened before. A new party has emerged out of such a schism, and that new party went on to be a party for a long time. So with that historical context, Thomas, are you a buyer of Tesla here, and what are your thoughts?
Yeah, I already bought some. I had to. Yeah.
You want to wait a day, Thomas? I mean, most people still don't even know this has happened.
Yeah, I'm afraid to miss out on this.
My only question is your timing. Are you figuring you buy some now, buy some more tomorrow kind of thing?
I might do that. So I gave myself some room. I sold a put spread at 245, 250. So I have a little bit of room here. I expect it the same way you said. I expect it to go down a little bit more tomorrow. I don't think it's going to be, the 15, the 14 and some change we have
this
today.
Is the 80% of it, and then it's just got to sort of trickle through the whole retail space for a day.
Yeah. But, Tesla stock, it's had big drops before, and recently, actually. I mean, you only have to go back to March 10th when Tesla's dropped 15.4%. Only a few months. What do we see in the days after that? I mean, circumstances are different here, but you saw, the next day it rallied 3.8%. The next day after that, it rallied 7.6%. So, there is a tendency for dip buyers to come in here pretty quickly. But I feel like with the room I gave myself, 245, 250, I'm in pretty good shape here. The volatility was there, got good premium on it. So took a stab at it. I might adjust the position tomorrow depending on, how we're looking. But I agree.
You got to buy Tesla here. I totally think this is a huge opportunity to buy Tesla.
Yeah. This is a good opportunity. And 250 is also a little bit technical. There's a good amount of congestion there. Through the March to April range, we had, sideways chop for a bit before we rallied. We've given up, all the gains going back to the beginning of May. So everything we did in May, we rallied about 30% Tesla stock. So, a significant up move. We've given it all back in pretty much a day here. So, this is almost like seeing your parents get into a heated argument for the first time when you're talking about your confidence getting shocked. You're a little off put, a little, discombobulated from it. So I think, this is bad for market confidence. Seeing someone as prominent as Trump and Musk get into this spat. I think I put this on before I saw the Epstein files tweet. I thought it was just a little back and forth, wasn't going to escalate too much more. Then you see the Epstein tweet, and then it's like, so, it looks like Trump's latest tweet or truth is a little bit of de-escalation. He definitely could have given, I expected a larger response to come after that Epstein tweet, but, we moved off the lows a little bit here today, not too much. Most of the losses held. It's going to be really interesting to see what happens tomorrow morning with this. But, just the weight of Tesla, if it continues to fall, it's going to drag down the NASDAQ. And then confidence is going to be, hinged on that. So going into the weekend here, especially if we get a lackluster jobs report on top of it, we could be in for some pain here.
Can I just offer one other thought here, which is not a particularly novel or innovative thought, so please forgive me. But don't you both think, and doesn't the world probably think, if you reflect on this for 1.5 seconds, that because of the reality show nature of this and because of the nature of these people, that there's got to be at least a 50% chance of a big public makeup session, reconciliation, I love you, I didn't mean to hurt you, I didn't mean it, you didn't mean it, within a week. That there's a 50% chance that if we're sitting here in a week and it's like, I didn't mean it, you didn't mean it, I love you, you love me. Come back, we can share a bed again, use the parental metaphor. I think that's all the more reason why you gotta buy Tesla.
So
I think that's absolutely a possibility.
Yeah. And, the betting markets are interesting. If you look, there's will Elon Musk unfollow Donald Trump this year? We're at unfollow Donald Trump this year. We're at 60%, trading right around there. Will Trump release any of the Epstein files this year? We're at 40%, up from 34% yesterday. Will Trump sue Musk? 45%. Will United States ban X? 9%. Those are both new bets on Kalshi. But definitely some interesting things happening there that, you can bet if you want to play this a different way than the market.
So I have a chart of Tesla here just to kind of contextualize what you guys are talking about. And Thomas, to your point, this move here has now erased just a little bit over half of the rally from the kind of Liberation Day low unwind. So if Liberation Day is like right here, essentially, and this is the day that the president puts his first 90-day pause on this thing, that's the low. Everything kind of rallies off that. We've erased more than half of it. We are basically now into this congestion area, let's call it, with a bottom around 270. And then if there's a further kind of follow-on reaction to all of this and we break down here, then the ranges you're talking about come into into force. So this digestion right here becomes the place you're looking for Tesla to kind of find a bottom and go, okay, chaos aside, the kind of fair value that the market might say applies to Tesla is here. Now, this is Tesla fair value in a world where whatever the company faces probably looks like some friendly fire damage from the, well, then friendly fire, from the reciprocal tariffs, because obviously Tesla has significant exposure to China, and probably some element of concern around the EV mandate going away, as the president has already posted about. So this is sort of fair value Tesla with those things in play. It isn't fair value Tesla with the company is in open warfare with its regulator and ultimately the holder of power in its most important jurisdiction, the United States. Now, I'm certainly not suggesting that there's not a reaction bounce off this. I don't really know. I think it's absolutely reasonable to say that you could have a kiss and make up session here before long. I mean, Elon Musk is not a politician, so take this analogy with a grain of salt. But obviously, the Republican Party is full of people that have both very loudly criticized and broken with the president, only to then become some of his staunchest allies. And we're thinking Ted Cruz, we're thinking Lindsey Graham. These are politicians, though. There's also people that have broken with the president that have not made up. So think Chris Christie. There's people who have always been opposed to the president and never came to the other side. Think Mitt Romney. So there's a range of outcomes here, and these are politicians. On the business leader side, we obviously had a much more anti-Trump perspective from, let's say, the tech world in the first iteration of the Trump administration, obviously a very different iteration now. So this can go a lot of different ways, but I think we absolutely have to be open to the idea that if these people were singing each other's praises like a week ago, and now they're in open public combat, they can be singing each other's praises again in another week. That's just, we have to be open-minded to that idea. But if they don't, and I think the thing that, incidentally, we've been saying on Overtime for a long time, and we certainly were not the only ones. The Economist wrote a whole expose on this. Both of these people are the type of people that think themselves the smartest person in the room, that are uncompromising, that are supremely confident in their perspective, and it was only a matter of time before the immovable and the unstoppable clashed in a kind of comic book way. This was coming, and people have been talking about it since last year, that these two personalities were bound to come to some kind of a clash, just by nature of their similarity. So let's see if they're both self-interested enough to make up, more so than petty enough to keep fighting. But in a world where they keep fighting, Thomas, is this still fair value Tesla? Because in my mind, the old Soviet adage comes to mind. And yes, I'm a permanently Soviet scarred individual, having grown up in that world for the first 10 years of my life. There's a Soviet adage that goes, the government always has one round in the chamber extra. And the sentiment is, you can pick a fight with anyone, but you do not pick a fight with the czar. Whether it's the czar or the commissar or whatever you like, you don't pick a fight with government, because the government always has one round in the chamber extra. So if Elon's going to pick this fight, and there's going to be an effort to strip him of these government contracts, is this still fair value Tesla in your mind?
So I mean, once we knew the big beautiful bill, the EV tax credits were likely gone, Tesla already started dropping.
Yeah.
And the argument for EV tax credits being gone, is it going to hurt legacy automakers more than it's going to hurt Tesla? Because one is going to somewhat benefit if one gets more hurt than the other. And if EV tax credits went away, it probably would hurt the legacy automakers more, since, they're not at the point where Tesla has gotten. So I don't know. I mean, it depends if Trump actually follows through on these threats. Some of the threats you could follow through on with less repercussions than other. If you're canceling SpaceX contracts and things like that, there's not another company that can step in, at least over the short term, that can do some of the things that SpaceX does. So that,
right.
That is unlikely in my mind to actually
or
play
Starlink,
out.
by the way.
Starlink too, yeah.
That's right.
Yeah.
That's right.
So yeah, I think if there was an actual retribution, a tangible action through the government, it would be against Tesla more so than SpaceX or Starlink. So yeah, I mean, what are investors going to want to see before buying this? Are people going to buy this thinking, it's a generational buying opportunity, whatever you want to call it? I'd probably say we do rebound from here. I think tensions will cool, cooler heads prevail. But you never know. I mean, with two big characters like this, two big egos, this could be a spat that, there's now a dividing line and they go their separate ways. And, the Musk isn't close to the president anymore where he can influence government policy to where it's going to benefit his companies. I'd have to say we rebound because I'm long, so that's my bias.
I mean, that makes sense. So I'm, just as an aside, I'm kind of waiting for the first reporter to talk to the president after this, bring up the taco trade and go. So does this fall under taco trade rules, or is that only reserved for China? And try to rage bait the president into another popcorn-worthy episode. Just taking a look at the sector performance here before we get too far afield. S&P 500 down 0.5% here. And looking at what that looks like sectors-wise, interestingly, the worst performer on the day, consumer discretionary, down 2.5%. That's not what you want to see. Staples down almost 1%, 9.96%. Materials down 0.6%. The only sector up on the day, comms, that's just a little bit higher, 0.14%. Everything else kind of fractionally down. Real estate flat, industrials flat, healthcare flat-ish, energy flat-ish. The big losses today centered on the consumer, and of course this has been one of my pet things, basically saying tariff this, tariff that, noise, noise, noise. The really important thing here is that in the first quarter we had the weakest consumption in almost 2 years come out of the GDP numbers, and that's 68.5% of the economy. Everything else is whatever. So if you lose the consumer, then how do you not have a global recession when China is at a standstill and the Eurozone is likewise, and both have basically been stuck there since the middle of last year? How do you then not lose the only pillar that the global economy has to stand on, which is the U.S., and that pillar held up by a service sector, given anemic manufacturing, again, going back to the middle of last year. So this is, I mean, you could blame the trade war, but that would be disingenuous. The trade war, if anything, has been a little bit of a lift to manufacturing as people have tried to front run the tariffs and restock. So the manufacturing sector has been anemic basically since even a little bit before the middle of last year. Services has been powering the U.S. economy. It's also why the strength in the U.S. hasn't spilled over into other markets, because most U.S. services demand is fed by domestic firms. And so the situation is such that even Canada couldn't benefit, and Canada exports 80% of everything they export just south of their own border. They've been in dire straits because our boom has been locked on shore, as it were. If you lose that boom, as the ISM services data yesterday suggested we're already doing, how do you not end up in a global recession scenario? And so to see that it's the consumer stocks taking the biggest hit today, ahead of what is perhaps a soggy jobs report tomorrow, which would be, of course, a referendum on the consumer, it's a wonder in my mind that stocks aren't down more. And maybe what they're looking for is a further catalyst. Maybe what they're looking for is for the data to actually come out. In your mind, gentlemen, by all means jump in and take a crack as you wish. Does this jobs report matter in the context of all this noise tomorrow? Because I know it does to me, but I'm a macro nerd. It will always matter more than all of this noise to me, because that's the thing I'm looking at. But will markets care?
I mean, this is a little bit of a mealy mouth answer, but to the degree to which it is meaningfully away from expectations to the downside, it will matter more than it would have before today. So if it's near expectations, it'll be whatever it's going to be. It'll move through whatever the churn is in the bond and the things. If it's stronger than expected, it will probably be bad-ish, because it'll be no rate cuts, all that jazz. If it's meaningfully weaker at the same, like right now, there's a referendum on the quality of American leadership. I don't believe it's good to have open indictment of the quality of American leadership in such a public fashion at the same moment that what I believe is the most significant economic data point in the country, which is the labor market, is showing shocking signs of weakness. You don't want the House to be weakening at the time when the king of the castle is a fruit bird and is in a reality TV show like Spat.
Thomas?
Yeah, I think it matters either way. Bad jobs report, market down. Good jobs report, market up. I think, a lot of the attention is centered on growth right now. So with the economic indicators weakening, is it consumers are simply tightening their balance sheets and being fickle in their spending in anticipation of a slowdown or, these tariffs impacting prices? Or is there a real structural weakening in the U.S. labor market, and are business leaders taking decisions now and saying we are going to hire less, we're going to start laying people off? If that's the case, I think that's a precursor for, a recession. And maybe perhaps it's not only bad jobs report means recession, but if we get a bad jobs report, I think it's going to put the market on edge. It's going to send a real warning sign that these weakening consumer numbers that we've seen are actually caused by, something deeper than just, households tightening their spending. And, you get unemployment rate going up, you get margins falling for companies, things like that, and then you get them laying off even more. And given the backdrop of trade uncertainty, and like Dylan said, uncertainty around the competency of leadership, then that creates an even bigger problem, a snowball effect, so to say. So I think this is probably going to be the most impactful jobs report of the year. It's going to be closely watched. I expect it to be volatile market reaction if we are anywhere outside of those expectations to any great degree. You get an inline expectation jobs report. The market might keep its focus on the prevailing narrative of, Trump, Elon, trade talks, things like that.
So just to, and I think we're all of a mind here. I think the bottom line here is this would be an absolutely awful time to get a bad piece of economic data, because the people that you would want to be polishing their firefighter helmets if there is a fire are too busy squabbling amongst themselves, and you don't want for a fire to happen then. You don't want for the people you rely on to come rescue you in the middle of an economic downturn to be preoccupied with schoolyard antics. And I can't believe I'm about to quote Kanye West here, but he put out a tweet earlier today in response to all of this. And again, I'll quote, "Bros know we love you both so much." So that's maybe a zeitgeisty lens on what's going on. And if you're the U.S. consumer and you've been concerned about tariffs and pulling back on spending, and maybe what you were doing as you're describing, Thomas, is kind of a precautionary thing, not dissimilar from what we've seen from businesses, where you read the PMIs, you read the ISMs, everybody's kind of like, oh no, uncertainty. We don't know how to make a bet here. So what we're going to do is not necessarily bet against what the president is doing. We're just not going to bet. We're going to take our money and we're going to pull it back until there's some sort of clarity on all of this. Maybe that becomes more hysterical and more defensive if, in fact, the situation is not just that we have uncertainty, but that the consequences for growth of that uncertainty are arriving in the one place you don't want it, the jobs market and the consumers, and the firefighters are too busy doing God knows what to pay attention. So that's not what obviously you want. And in the context of all of this, I think for me, the thing that stands out maybe most of all is what the bonds are doing here. And go to the contiguous contract because that looks like a more insightful picture here. And I'm just looking at the 30-year because what we've seen, incidentally, as foretold on this very show over the recent weeks, is this idea that you have an economy that's decelerating at best, let's say, and maybe it's decelerating for sentiment reasons and not hard data reasons, but it is decelerating, that much we know. And the Fed is not saying that it's going to come and do things about it. The bar for the Fed has been raised very high because we've heard the Fed now basically since March make this argument that, look, we don't know what to do because what all of this does is it puts our two objectives, maximum employment and price stability, in direct conflict because we don't know how these tariffs are going to work out or what's going to happen, but we do know that historically tariffs are inflationary because they amount to a consumption tax on imports, and also that they're bad for growth because they put up trade barriers, they reduce economic activity, they make things more expensive. So how are we to figure out whether we should be cutting or hiking? If it's inflationary, we should be hiking. If it's bad for growth, we should be cutting. We don't know what the balance is, but good for us, inflation is not terribly high and still going in the right direction overall. Unemployment is still relatively low overall. We have the benefit of time. We're going to sit on our hands. And so what you've seen in Fed funds futures is that expectations for this year have become anchored, but expectations for next year are getting increasingly dovish. And that's the markets telling you what all this means is the Fed is going to wait to see the whites of recession's eyes before they act, which means they're going to be later than usual to respond. And what that will mean is more cuts are going to be needed later, if later is what you wait for. And you've seen this show up now in the bonds, obviously, with very clear emphasis this week in the wake of yesterday's weak ISM services data. You're starting to see, and obviously this has been going on longer than that, since last week, give or take, even let's say a week and a half ago, we've seen this slide up in the long end of the curve because you're starting to get this expectation that there's going to be more cuts later. So the way that I'm sort of looking at this in terms of the jobs report is saying, if the jobs report is, let's say, somewhere in the middle of the distribution of outcomes, so if you kind of envision a normal distribution curve, and you say, here's the right tail, here's the left tail, and then there's most outcomes in the middle. If you get one of these middle outcomes, that might be the worst of all possible things. Because that tells you that things are degrading, but they're not degrading in a way that the Fed is going to come and rescue anyone soon. If you get, and by the way, you're looking at the Fed even more intently after today because you know where nobody is fighting with anybody and getting into schoolyard spats at the Fed. So as ever, you're looking to the Fed to be the competent economic firefighter while everybody in Washington is doing their Washington thing. And so if you get a middling number, then the Fed's not coming, at least not on any kind of near-term timeline. If you get a really strong report, that's probably relatively good news, but you'd have to go way out there to get a really strong report to tell you, well, actually, everybody's wrong about the economy. The economy is actually strong. We don't need rate cuts, and that's a good thing because of how strong the economy is. All of this is nonsense. And then if you get a really weak report, then that's probably bad news because that's negative for the economy. But it would suggest, and perhaps that makes it good news ultimately, that the Fed is coming soon, that the Fed is going to look at all of this and go, okay, now's the time. Obviously, the economy is coming apart to a greater extent than we thought. So it seems to me that it's at those tails that the good news is, but in the meat of the distribution, you get ongoing chaos without firefighting. And that becomes the bad outcome that you're looking for. You then get more rate cuts later. So the bonds keep going up. The dollar probably sells off on that speculation. And then stocks don't like it just on general. We have nothing to work with here grounds. I should point out that since we've had this widening of the spread between when the rate cuts are coming, so May 22nd we saw here is when the long bond starts going up around this idea that we're going to wait longer. This is where that is. Once that begins to happen, the stock market stops rallying. That's where the cap is. So,
and so the degree to which the jobs number actually emphasizes that, then then it's a lousy event for anybody who's a bull.
Yes, that's kind of my 2 cents on this. That the last thing you want is status quo. You want either something so bad that the Fed is going to stand up off its chair, roll up its sleeves, and go in, or you have something so good that everybody breathes a sigh of relief and goes, you know what? Forget all this noise. The real economy is fine.
Buy them.
Yeah.
We shall see.
And with that, overtime is out of time. Don't go anywhere because I'll be back in just a couple moments here for Macro Money to go through a ridiculous and probably unnecessary amount of charts to prepare you for this NFP report, alongside a really fun tidbit from the Wall Street Journal, which has been questioning whether any BLS data is even worth looking at. Stay tuned for why that is. And we'll be back with you. Thank you, Mr. Westwater, for covering here today. A very welcome perspective, as always. From Milan, Chicago, and San Francisco, this has been Overtime. Don't go anywhere. We'll be right back.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No. I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean that.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
And the jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
yeah.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
People are always Everybody's asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
tastylive's godfather of options, Tom Sosnoff, is grabbing his path.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
What a day. What a day. It is certainly not without fireworks that we head into the end of the week here. This is Macro Money. I am Ilya Spivak, head of Global Macro here at Tasty Live, and we thought we were going to talk about macroeconomic data here today, and we will, against all odds, but of course, the big question swirling around with the way that the trading day ended here as the closing bell was about to ring is, does anybody care? Because, of course, what we've had here is a blow-up. I suppose it was always brewing, but a blow-up between the president of the United States and the world's richest man, Elon Musk. And needless to say, Tesla stock reflects just how bad it was. At one point, it was off nearly 17%. Tesla finishing the day here in ugly shape, ultimately closing down 14.3% after the president threatens to take away government contracts from the Elon Musk universe of companies. That, of course, includes things like SpaceX and Tesla itself. And so lots and lots and lots of fireworks here at the end of the day. But for us as traders, we need to contextualize this practically. We can't be trading the soap opera because that's not a forecastable set of variables, and that, of course, makes things exceedingly difficult to figure out and makes risk exceedingly difficult to manage. So without losing sight of the drama, let's take a look at some actual economic variables that factor into this equation, and then bring the two together and extract out of them what is a tradable set of ideas that we can actually take into the markets and do something with in the real world. So, needless to say, the piece of data that we're talking about here is the U.S. jobs report. This is expected to be something of a cool down, not an aggressive one to be sure, but a cool down nevertheless. Expectation is that we're going to have 130,000 jobs added in the month of May. That would be down from 177,000 in April. It would also be the smallest increase since the shock 36K rise in October of last year. You can see that on the chart there. So this would be a very soft reading indeed, but not a soft reading outside the kind of recent range of outcomes, broadly speaking. So if you want to kind of take a look at this range here between, let's say, just above 300 and sort of taking this jump here into the range and sort of looking at this right here, we get about a labor market that is within its recent collection of outcomes. if you want to take a slightly more conservative stance and say, here's your range here, and you take that from where the unemployment rate has been, which is oscillating in a narrow range between 4.2 and 4, then this basically takes us back, give or take a year, almost a year, not quite, to August of last year. So let's say a 9-month kind of standstill for the labor market, because the expectation is that we're going to stay right there once again, 4.2%. The lead-in on this data is, let us say, mixed. So yesterday, we had the estimate of private payrolls from ADP, and as ever, take this thing with a grain of salt. It is not the world's best predictor of how NFP comes out by a long shot, but nevertheless, it is an indicator that the markets pay attention to somewhat. The expectation was that we'd get 115K, and it ended up being 37, so obviously a major downside surprise here. Also, the weakest reading on this metric that we've seen in quite some time. We'd have to go back all the way to May of 2023, where we had a shock decline of 53,000 jobs to get something relatively similar. So we're talking about a more than 2-year low for the ADP measure here. Looking at the employment components of the ISM surveys from the Institute of Supply Management that we just had this week, the picture is, let us say, a little bit more encouraging, but only a little. We have here, of course, a set of indicators built like PMIs. So 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. The upshot here is that the service sector gets a positive month of job creation, according to these numbers, in May, despite the fact that overall the service sector itself shrank unexpectedly. That's what we saw in the data yesterday, and of course that gave the markets quite a bit of indigestion. We'll get to that momentarily, but nevertheless, we do get positive employment growth. It's not tremendously strong. In fact, it's barely above that 50 line, and certainly still a major downstep from where we were on jobs growth even just recently here. But nevertheless, we had been contracting on service sector employment, which accounts for anywhere between 70 and 80% of all jobs in the United States. And after 2 months of contraction, we saw growth. So that's somewhat encouraging. On the manufacturing side, of course, we've seen a contraction in employment for 4 consecutive months now, and the trend has been toward weakening, but and that's been there really since we peaked after the massive rebound from COVID lows. But at least here, it doesn't look like May was a terrible month for job creation. The jobless claims numbers we saw come out today, they paint a scarier type of picture, and their reference point is perhaps scariest of all. We see a significant surge in initial jobless claims last week. And for a reference, obviously we can see that they've been going up since the beginning of the year, but this is the highest since about October. And of course, what do we know about October 2024? It's not a happy time for the labor market. We can see this was where that errant spike down to 36K was. So if jobless claims are telling us anything about the overall dynamics of the labor market, the story they are telling is not a happy one. Overall, looking at the way that U.S. economic data has evolved relative to expectations, we regularly look at this index from Citigroup that measures the way that U.S. economic data performs relative to forecasts, takes it in aggregate, and measures how things are behaving, and dumps them all into this one indicator, where 0 is data is performing exactly as expected, above 0 is better, below 0 is worse. And we can see here things have been kind of muddy here recently, but the reading of negative 3.1 here narrowly suggesting that we are biased toward downside surprises. Now, what does this mean? It suggests that the models that economists are using to generate economic forecasts are spitting out variables that are rosier than reality is endorsing in the most recent figures. Minus 3.1 is not a right home about kind of a miss. Obviously, we've seen worse things. And last year, we saw a worse growth scare. But nevertheless, it does suggest that there is a slight bias to those models having overshot expectations if they are tuned to a rosier reality than actual results are suggesting. That, of course, is tilting the probability, however modestly, in the direction of a downside surprise until those models are retuned. And because we're maybe just at the start of some sort of a revaluation of those models because we've just flipped back negative, then there is still runway here for this data to disappoint. On top of all of this, there is this bit of additional fuzz. And this comes from the Wall Street Journal, and it has to do with CPI, but the relevant bit here is this comes from the Bureau of Labor Statistics, and the data that we're going to get from the very same people is what we're waiting for. The jobs data is likewise coming from the same statistical agency within the U.S. government. So it bears discussing. What this chart is showing us, and what the story from the Wall Street Journal broke yesterday, is that economists are becoming increasingly leery of the quality of U.S. economic data because hiring freezes and layoffs and budget cuts since the beginning of the year around the effort to slash government spending and reduce the size of government that, of course, Elon Musk, until very recently the so-called first buddy of President Donald Trump, was overseeing, that what all of these things did was significantly degrade the amount of resources that the BLS has to conduct the surveys that it bases its data on. And so what it's had to do is use these kind of imputed readings and implied figures much more so than actual survey responses, and that they've had to do that to a much greater degree than before. So we can see here that basically going back to COVID times, there is a spike in how much of this stuff is being used. We can see sort of what's normal is about 10%. Obviously, during COVID, things were on lockdown, so more of this was being done, maybe up to about 15, 16%. Over the subsequent years, we've come back into this kind of more normal around 10% range. But over the course of the past 2 months, April and February, and of course April with the most aggressive effect, more and more of the data has been from these alternative sources because there's just not enough people to do the surveying. And so the reliability of this data has come into question because now close to 30% of it is based on what some economists worry is fuzzy math. And so if this is true for CPI, which comes out of BLS, it's perhaps also true for the jobs data, which comes out of BLS. So what these numbers ultimately mean and how much weight they have will be an important question, on top of what the content of the data itself actually is. And of course, no more is this more evident than in looking at what the Fed has been saying and the expectations for monetary policy that have followed. So what you see here is that, cumulatively speaking, the market is about where the Fed has been saying it wants to go, or at least it thinks it's going to go, going all the way back to December, March. So we haven't had the June update, of course, so far of the summary of economic projections, but both in December and in March, the Fed said 50 basis points apiece this year. Next year, that's how many cuts you're getting. That's 100 basis points. The market is only a little bit above that here at 107. But the dynamics of what's occurring, they have changed considerably. And of course, what the Fed has been saying is, look, we have these tariffs that are occurring, and we don't know what to make of them. Because historically, what the tariffs mean is something bad for growth, because tariffs are a tax on imports. That makes imports more expensive. That hits consumption. Consumption is the overwhelming majority of the economy, so not exactly rocket science there. But at the same time, they're inflationary because of all these same dynamics. So if these policies are both going to stoke inflation and they're going to be bad for growth, then what's the Fed going to do? On the one hand, they're being pulled to cut rates to help with the piece on growth. On the other hand, they're pulled not to do that because they don't want to let inflation expectations out of the bag, because then we're back to the bad old days of inflation before the Fed's 2022 rate hike cycle that, of course, has so painstakingly worked to bring inflation down. And so what the Fed has said is, look, we just don't know which side of the ledger we're going to prioritize here, but good news, we're well positioned to wait because the unemployment rate is still, relative to history, somewhat low. Again, we're kind of hovering near relatively low levels here, despite the kind of creep from 3.4 up to 4.2. And of course, inflation is on its way toward the 2% target. It's slowed down on that path somewhat recently, but nevertheless, it is hardly surging. So we have a situation here where we can just sit around and wait and see what happens. And so what you've seen against that backdrop is the expectations for what policy will do this year have become relatively anchored. The Fed said 50 basis points. We have 48 basis points on the menu, and this is not going anywhere. But you can see the cumulative amount of easing this year and next has actually started to expand. And that's as more rate cuts get baked into next year, because the market is evidently judging, as we've discussed here before, that delaying rate cuts now will mean that the Fed will have to do more rate cuts later, because it will have let the economy weaken more so than they might have otherwise to get this additional evidence. And then they're going to have to do some degree of catch-up. And the reason the markets appear to be convinced that this is in fact what's going on, as we've talked about here before, is the measures of inflation baked into the bond market, so-called break-even rates, they've been going down since the beginning of the year. And despite the violent rebound in stock markets that we've seen, they have actually not recovered, as though to suggest that what we're looking at here is a situation where inflation isn't going to surprise higher because of the tariffs. It's going to surprise lower because whatever hit economically comes from the tariffs will be bad enough that it hurts demand to such an extent that the disinflationary forces of the demand decline will be more consequential than the inflationary forces on the other side. In fact, we've, as of today, declined to just 2.3% on the 5-year break even. For context, that is the lowest that we've been in about a month and some change. So going back to the beginning of May, late April here on the 5-year break even, to essentially say, look, the market thinks that the Fed is being indecisive, but they are in fact convinced that it's the growth side that needs to be prioritized, not the inflation side, because whatever economic downturn is coming will be the dominating influence. And we've seen this already showing up in the markets. So let's take this same policy calculus and note that right here, where this widening out of the spread starts to happen, where easing starts to rebuild, even as expectations for this year hold steady, but those for next year expand, the violent bounce in stock markets from the April low after so-called Liberation Day, when everybody was freaking out about the latest version of the Trump tariff regime. Since we've kind of walked that back, this is where stocks stop rallying. Exactly where Fed easing starts to build and become more kind of skewed to next year in the outlook. That is to say, the market has already decided that growth is going to be the bigger concern. They see the Fed as dragging its feet. They don't like it. Stocks have stopped rallying. At the same time, the US dollar is continuing to weaken. Notice it had itself a bad start of the year, but whereas stocks started to bounce right here, and kind of reached peak easing, and then we came off that as sentiment improved, the US dollar never really had that bounce. It stabilized a little bit, and now it's just continuing to sink because this easing is undermining the dollar's yield advantage. So with that in mind, we look to what is a normal distribution curve. And obviously this is more a symbolic thing. These aren't real numbers here. They're standard deviations in a regular kind of distribution, and we're just using it as illustration here to say, if this is the majority of outcomes for what the NFP number might be, and this is, let's say, the center line. So obviously the forecasts are a median, not an average, but let's say this average is right around what expectations are, which again is 130K. Let's say it's right around there. So if you're anywhere in this meat of the distribution, well, then the bottom line continues to be this. The economy is slowly weakening. The Fed isn't coming. Stocks don't like it. It's bad for the dollar. If you are at the long end or the right side, the optimistic side of this curve, and NFP ends up being much better than expected, well then, yeah, rate cuts aren't coming, but maybe we don't need them because the economy is fine. Let's ignore the noise. Let's focus on the brass tacks. Good news. If it's exceedingly bad, well, the president is squabbling with the richest man in the world, so we can't get any coherence there probably on economic policy. And in any case, the administration is too preoccupied with passing its big, beautiful bill of fiscal policy to pay attention. But maybe if the number is really, really bad, then finally the Fed will get off its hands and go, you know what, we've made up our mind, we've got to go. And then you got a policy announcement in June where they have all the space to kind of tell the markets, rest assured, we're coming to the rescue. It's really, really on now. That's good news. Outside of the tails here, then, the majority of outcomes, the middling outcomes, they end up being bad because they end up sustaining the status quo. And so in that environment, perhaps this range on the S&P holds and you head lower. This breakout on the bonds holds and you head higher because you continue to price in more cuts later. And perhaps the US dollar breaks through this floor that has held since the middle of April, and then you really get the next big down leg in its descent since the beginning of the year. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm back with Chris tomorrow, as I am every Friday for Futures Power Hour. I'll be back with Victor Jones and Tom for First Call on Sunday. I'm writing for the News and Insights portion of tastylive.com, commenting at Ilias Pivac on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back next week. Good luck. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
What is going on, everybody, and welcome back to Risk and Reward with Errol and Gus. Today we got a special segment. We're going to touch on some recent news going on in the market and get into some of the positions that we have on. But before we get into all the shenanigans from today, Gus, How we holding up today, brother? We got one more day at the end of the week. Things are going crazy. How we doing?
Oh, I'm doing well. I'm hanging in. You're looking sharp without your glasses. It's like school picture day out here. You know, I gotta let it air out every now and then. No, I'm feeling good. Yeah, certainly a eventful day in the market. No shortage of talking points for us, and I'm excited to dive into all of it with you. And yeah, I'm short Broadcom into earnings, and it looks like that's going to work out. So I can't complain.
Nice. So you were short into Broadcom in earnings. I take it that you're looking at it right now. What is Broadcom up to right now? Keep us posted.
It was 259 when I came in here. It was trading at 249. Let me have a look here. Yeah, back up to 251 after hours. They beat revenue and EPS. The whole basis for the trade was just that I thought it was overextended on this crazy run that it's been on, and it seems like that's going to pay off. I initially sold just one naked 285 call because premiums were super juiced on that run up, and then I added two 285, 295 verticals. So I'm short 3 285s and long two 295s. So
nice. What's the expiration on those?
That is tomorrow. It's right up to the wire. I put them on like Tuesday or something like that. But yeah, harvesting some nice premium there, so I can't complain.
Nice, I love it. I'm kind of in the same boat there on Lulu. Got short Lulu. I think it might have been beginning of this week. I think it was the first day this week. Got short some Lulu, held it into earnings, and I just pulled up the chart unintentionally, and I saw Lulu, and it looks like it's dumping too. So it looks like the overall market's dumping right now, but that's going to help out our short position. So we'll see. We'll see how we manage those into tomorrow, but those are sitting pretty so far. Other than that, anything else standing out to you?
Yeah, we've been waiting for the pop and the fix, and it seems like we may get that tomorrow amid all of this news. And also I picked up some shares of Constellation Brands today, STZ. They're the largest beer and wine distributor in the United States, but they got hit pretty hard. They had a lawsuit into an earnings call, I think, and the earnings call didn't go well, so just way beaten down, oversold in my opinion. Picked up some shares at around 170, slightly green, but just hoping for a return to those 200 levels.
Yeah, we'll see how some of these things play out, especially with all the shenanigans that we got to see today. So we'll go ahead and jump into the slides here, and we'll go ahead and break some of this down. But if you've been under a rock for the past, I would say even hour or two, because I think this is something like if you happen to be checking socials, you happen to be checking the news, then you're like, yo, is this stuff with Elon versus Musk really real? Like I had to really double check. I'm like, yo, is this real beef going on right now? So I know there's a little bit more context to it, and we're going to get into exactly that, how Elon and Musk and Donald Trump started beefing right now and how that could potentially affect the rest of the market and some of Tesla's stock on the no trade list. Gus, I see why it's on the no trade list.
Oh, man, you do see why it's on the no trade list. And I'll tell you what, Errol, I'll tell you what, I was the closest I have ever been to breaking my no trade policy today when Tesla was down 8%. And I am so happy that I laid off because I would have been so mad. I was going to get long. And I would have been so mad. So I'm happy to have it on the no trade list for now. We're asking about finals predictions in chat. We'll circle back. We'll talk a little ball at the end. Don't worry about it.
Yeah, no, we got to circle back around to that. But no, I mean, explain what's going on with Elon and Donald Trump and Tesla stock in NBA terms. I mean, we'll come up with something by the end, but we'll go ahead and jump into these first slides here. Elon Musk versus Donald Trump. Elon Musk and Donald Trump squared off in social media beef for the ages today, and here's what happened and how the market reacted. So let's get into it. So give us a little update. What's been going on, Gus? So I know over the last few days, there's been more talks about budgets, bills. I know Elon Musk was brought on to really cut a lot of waste, reduce spending, really get our debt under control. So give us a little bit of a timeline.
Yeah. So yeah, quick little timeline here. And this is much more nuanced. Feel free to go have a scroll through Elon's Twitter or Trump's Truth Social for slightly more elaboration, just hitting the high points here. But Elon began speaking out against Trump's big, beautiful bill 2 days ago, June 3rd. And things came to a head yesterday, June 4th, when Musk emphatically tweeted, "Kill the bill." We have screenshots coming up here in a minute. Trump clapped back at this tweet today for the first time, his first time diving in and acknowledging the fact that Elon was talking shit this whole time. And he said that Elon was just mad that the EV mandate was being lifted. And that started an all-out war. All of a sudden, they're going back and forth. It's an impossible war to follow because they are on different social media platforms, which makes things quite annoying to keep up with. And then Musk clapped back and said that he believes Trump is on the Epstein list, and that's why they haven't been released yet. Trump didn't acknowledge these comments. He instead just put out a pretty generic tweet in favor of the bill and a slightly anti-Elon tweet as well. But yeah, it's beef. We have the leader of the free world beefing on Twitter with the richest man in the world. So that's where we're at in 2025. This is what we do now.
I know we're going to get into the screenshots here in a moment, but it's just so interesting, right? We got Elon, who purchased Twitter, known as X now. And then we got Truth Social, which is Donald Trump's social platform. And it's just so interesting. I just see this beef going back and forth. I'll go on Twitter and I'll see Elon Musk's tweets, right? And then when I see Donald Trump clap back, I see the screenshots from Truth Social with like the green check mark. And it's just so funny. They have their own platforms and they're beefing from what they hear is being said over here to on this platform and then just back and forth. So never thought I would have seen it done at this stage, at least. I'm familiar with Twitter beef, right? Like social media beef, especially, you know, if you grew up with social media, it's a common thing. It's not rare to see, but to see it with two very, very high profile figures, never thought I'd see the day. But we got the first tweet here. I'm sorry, but I just can't stand it anymore. And this is on June 3rd, just like what Gus was mentioning. This massive, outrageous pork-filled congressional spending bill is a disgusting abomination. Elon clearly not happy about the spending, and then shame on those who voted for it. You know you did it wrong. You know it. So Elon Musk coming out with these piercing words. I mean, these are some pretty sharp tweets to come out with. Do you think the bridge is completely burned here? I feel like there's really no returning from here.
I do at this point, and especially as we get into some of the tweets that are going on later. This extends beyond a political or business style conflict. This is, it's getting pretty gnarly. I think it's interesting, and the big back and forth here is whether, and I mean, this is a subjective thing, nobody really knows, but it's whether Elon actually fundamentally cares about the U.S. deficit, or if Elon is really just upset, as Trump says, that it's because of his EV credits. So we're back and forth on that. Price action for Tesla on June 3rd here. This stuff didn't really start to jump until about today, which we'll get into some fun price action today. But yeah, initial response from the market to Elon's opening tweet in this salvo was pretty much a nothing burger. Slight upward action on June 3rd.
Yeah, and just speaking some thoughts out loud before we get into this next tweet, I just think too, like, okay, what are the incentives? What are the incentives? You know, a huge incentive for Donald Trump to become buddy with Elon, you know, influential power, you know, those kind of things, you know, incentive for Donald Trump too. When I think about it, like, okay, if Elon's is friends with Donald Trump, who can affect some of these, laws that go into place and how things play out. You know, he owns a huge EV market, and he's really the industry leader in the EV space. I'm like, okay, you can kind of see how, you know, Donald Trump could get value out of Elon and how Elon could get value out of Donald Trump. But I'm really just curious on how this really broke down. Like, what was the straw that broke the camel's back? And something had to have been brewing before everything fell over. So those are just kind of my current thoughts. But we have another tweet here. Musk kill the bill tweet. Call your senator, call your congressman. Bankrupting America is not okay. Kill the bill. I mean, this is pretty as straightforward as it gets. I mean, going out onto a social media platform, it's not like you're speaking to the press. It's not like you said something kind of vague. I mean, it sounds like Elon's calling it out pretty clear, is what it looks like on my end, Gus.
No, I agree. I mean, he went straight forward. There's no beating around the bush. And
he went straight for the throat.
Yeah, and at this time yesterday, everything was still political. This had not yet gotten personal at this point yesterday. Elon was still just on this high about wanting to kill the bill. And yeah, I don't know. I think you bring up a good point about incentives and what both parties have to gain from being friends in the first place, and now what both parties might have to gain from beefing. And I'll get into this in a little bit, but I'm conspiring in my brain that perhaps Elon is thinking about wanting to run for president. And his pinned tweet, which he can't do, he was not born, he's not a nationalized citizen. He's a citizen, but he was not born domestically, and you must be born in the United States to be eligible to be the president. But he's suddenly tweeting out and saying his pinned tweet right now is this survey that says, is it time to create a political party for the 80% of Americans in the middle, yes or no? And people are voting on that, which to me indicates that he might want to try to get involved in politics himself in the near future, potentially as a third-party candidate.
And to your point there, I think I'd seen that tweet. I believe it's about an 80-20 split. So, I mean, the data, I know it's just a poll, it's just a data point, but that data point's really interesting, you know, and I just wonder again, because guys like that don't end up in the places that they're at by complete accident. You know what I mean? So I just think too, like, these guys had to have known certain scenarios could potentially play out. And I just wonder, like, if they would have thought this scenario would play out and how they would move their chess piece pretty much if this scenario played out. Like, if everything hit the fan, it's like, was that Elon's plan too? to take it out of his back pocket, like potentially rile people up for another party, that could be a potential candidate to go against the Republican Party or the Democratic Party. I don't know. Just seeing everything from the last few hours just has me thinking about all these things that could have been, because it's like anything's possible at this point is how I feel.
I agree. And the reason for my belief that might be his angle is because at this point, you are now the enemy of both parties, at least of liberals and conservatives. There's people in the middle that might be picking sides in this battle. But you made the liberals hate you with everything that you did with Trump, with Doge. And now you're going to turn around and make the conservatives hate you, going at Trump's throat. And from a business perspective, especially from a Tesla perspective, you're just alienating everybody now. I don't know what the thought process is there. But from a political perspective, the only reason I can see alienating both parties like that and trying to just chuck yourself firmly in the middle is if your plan is to try to form some kind of third party. And Elon Musk, like you said, you don't become the richest man in the world by accident. I would bet that there are very, very, very few decisions he has ever made that were not extremely calculated. And so I think that there has to be a broader motive with all of this.
100%. And calculating scenarios that have a very low probability of happening. A guy that like that, I don't put it past him. He had to have thought about these even improbable outcomes. Like, if this happens, how would I go about this? So don't put it past him, but just interesting to see how these things play out. And with that being said, Tesla's June 4th price action, we're starting to see a little bit of a hammer here, right? We haven't even got to June 5th yet, but it looks like we started to see a little bit of effect of this negative sentiment, it looks, on June 4th, Gus.
Yes, and I think it's noted that I believe the market closed slightly red yesterday as a whole as well. So there might be conflating variables going on. But yeah, this is where we first started to see a little bit of spillover. People maybe realizing that this relationship is breaking down and starting to collect their profits, which I'm sure there were lots of people taking profits as soon as this all started to break down. Tesla's been on an insane run. But yeah, we start to see the little inklings of Tesla and the price action on the 4th.
Yeah. And then, before we get to the 5th, it's looking like we got a tweet on Trump's social.
This is the 5th. This is today as well. This was the first time Trump responded was today.
There we go. And then now once Trump responded, Elon was wearing thin. I asked him to leave. I took away his EV mandate that forced everyone to buy electric cars that nobody else wanted, that he knew for months that I was going to do. And he just went crazy. If I'm not mistaken, I believe I seen on Twitter, Elon, I believe, tried to refute this point right here.
Elon's retaliation to this point was he just said it was a blatant lie. It was a very short tweet.
This is the most obvious lie.
Yes. That was his defense. Nobody knows. Nobody knows if he knew or not behind closed doors, I suppose. But then, all of a sudden, this was what really set everything off today, and is what really set off the market action on Tesla that we're about to get into. Yeah.
This is when I started to get into is this a refresh close out? Right when I saw this.
Yeah. So Elon finally goes in for the jugular, says time to drop the really big bomb. Donald Trump is in the Epstein files. That's the reason they haven't been made public. Have a nice day. And then he basically says, book it, in his second tweet. This is very interesting. These are very lofty accusations, though he is far from the first person to make them. It'll be interesting to see how it all plays out, because Trump did run on trying to get this Epstein list out, and it has not happened yet. There was little inklings of it right at the beginning of his presidency, and then it kind of just went away. That's something that I know Trump voters are unhappy with, is the lack of a Epstein list release, and I'm unhappy with it as well, I might add. It's interesting. It's a lofty accusation. It's you can't. It's hard to prove a negative. I suppose maybe Elon is trying to force his hand just to get the list out. But this is nuclear. This is the nuclear option for Elon. And this is the moment where I say this is irredeemable and these guys are going to hate each other forever.
I think you're right. This is huge. This is where things start to get a little touchy. It starts to get a little personal here. And just thinking about Elon's decision to say something like that out there, and then not only that, to double down on it, right? To book it, like you kind of just mentioned, mark this post for the future, the truth will come out, right? If that truth doesn't eventually come out, I feel like Elon Musk is gonna lose a lot of credibility. So I just think, again, I assume Elon knows the repercussions for tweeting something like that, and understanding the repercussions, maybe from a credibility perspective, what would happen if that does not come to fruition. So it's very bold to go ahead and throw stuff out there like that. That's why I'm just really interesting to see how this is going to play out long term, because they're really sticking their necks out here in terms of credibility, because we'll see how things digest. And like you said, it's not the first time there's been people saying things of the sort along the same lines, kind of what Elon's saying, but Elon's not everybody. Elon has enough power to influence administrations, like we just saw with our last one. So Elon isn't just anybody. Elon has a lot of power. We saw a guy that's not even born here just wealthy work his way up into the administration if it doesn't just show you how powerful he is. So for him to say something like that, I'm like, I don't know. Is there something more going on? When you go personal like that, it just makes me think like he must, I don't know. It just feels like it went off politics so fast. And I don't know how you feel about that either.
Yeah, no, I mean, yeah, he absolutely went in for the kill. This is something that I believe if Elon is sitting on evidence of this being factual, that he should get it out. And to the point in chat from Maiku, yeah, he said you can't threaten a sitting president. And I have started to see sprinklings of people calling for treason here as well with Elon. And I don't know that I don't think he's done anything that's inherently treasonous yet. I think everything he's done so far is absolutely within the guidelines of freedom of speech. I'm not accusing the man of treason. But that is something that people are starting to whisper about. And I mean, potentially something that Trump could try to move on if he gets angry enough. Although, to his credit, I appreciate Trump not taking a personal dig back at Elon and instead trying to stick to the politics. I do think that that's well, I suppose he took a small dig back. It was not a personal dig, though. He said, we're going to take your money, but he didn't say anything about Elon personally. But yeah, this is the response here. Should I do an impression? Should I read this in?
Yeah, let's hear it. Wait. All right, let's hear it.
I don't mind Elon turning against me. Should have done so months ago. This is one of the greatest bills ever proposed to Congress. It's a record cut in expenses, $1.6 trillion. The biggest tax cut ever given. If this bill doesn't pass, there'd be a 68% tax increase. Things would be far worse than that. I didn't create this mess. I'm just here to fix it. This puts our country on a path of greatness. Make America great again. And then the tweet preceding that one, he said we would save billions and billions of dollars if we eliminate Elon's government subsidies and contracts. This first tweet is hilarious because, like, I do believe this is objectively true. I do think that there are billions of dollars in subsidies floating around in the EV space right now. But that is like such a drop in the bucket as it pertains to the actual, national deficit.
100%.
And also, is that the easiest way to save money in our budget? I don't know if it's the easiest one, but it had to make me laugh a little bit. But yeah, and this is where we're at. I
just gotta say that was pretty good. I gotta say the fluctuations in the vocal cords was pretty on par. I definitely recognize that. Right.
Thank you. I try my best. Probably more wine and Ambien and many other things contributed to Elon's tweets. Yeah, that's possibly true as well. I remember seeing.
You think Elon's just chilling?
Yeah.
So why? Like,
he's just high off his ass right now. He's gonna wake up in the morning and be like, "Wait, what? I tweeted what?"
But no, this was Trump's response off of the very direct tweet that Elon had put out earlier today, about an hour before the close. But June 5th's price action for Tesla really taking a hit here. And I mean,
could barely fit it on the screen.
Say that again?
I said we could barely fit it on the screen. Tesla's running off the bottom of the screen here.
It's literally running off the bottom of the screen. So make sure you update or refresh your platforms. No, I meant to drag it up a little higher. I didn't realize I did that. But as you can see here, Tesla's been taking a massive hit pretty much all day. I was in the same boat as you, wanting to get long after initially seeing that down move in Tesla. I even wanted to at the end of the day, and I was like, you know what? Don't do it. For some reason, this one just didn't feel right to get long because of all of the uncertainty surrounding it. It's not something I've seen before. I've never seen somebody legitimately beef with the president. What a time to be alive. We got somebody really beefing with the president. We're all here to see it in front of our face. I just never thought we'd see something like that. And because of all that uncertainty, I made the decision. I was like, you know what? I'm not going to scoop up some out of the money Tesla puts. Even though that premium was jacked up, that volatility was spiking on Tesla, ended up leaving it alone. So it's still on that no trade list for me for now.
Well, yeah, my thought process today, it was like this shifting thing because at first Tesla dipped, I think it dipped like 3.5%. Then we went to 7%. And then we got, which you can kind of see happening in the price action here, there was some stability and then some more downward and then some serious downward action once the Epstein tweet went out. And when the initial tweets were going off and they were going back and forth, I was just thinking, okay, this is a political thing. I don't think that this political debate between these two people really justifies this type of downward action on Tesla. I'm sure that this is just going to be a little spat, whatever. But then all of a sudden, the Epstein tweet comes out, and I'm like, oh, okay, we're going nuclear here. And the market seemed to have a similar interpretation. As soon as that tweet came out, it fell all the way off. Tesla closed today down 14.26%, which is actually a recovery from their lows of the day. So yeah, quite the move out of Tesla.
100%. I mean, as we wrap up, this is how NASDAQ closed on the day. Very similar view like Tesla, right? Tesla looks a little bit more aggressive to the downside. But I mean, the overall market started selling off a little bit in this afternoon as well and continued into the close. So that's what we had gotten, a little bit of an update on the Elon versus Trump shenanigans. It feels like reality TV. I don't really know what to make of it.
It feels like a South Park episode, for real. I mean, yeah.
Right. And you know, we're sitting over here, but it literally feels like I'm watching a reality TV show right now, and I'm waiting to see how things, you know, unfold. You know, I bet it's not funny for like Elon and Trump and anybody else that are affected by the beef going back and forth. But look, I got to say, beef was always a little bit entertaining. Okay, I can't be the only one. I'm curious to see how this is going to pan out. But as we head into the platform here, a little bit of SPY, that downward move helps a little bit.
We might get a big downward move tomorrow as well, especially with AVGO driving everything and coming down after market here. You're like, yeah, you got a solid chance at these all of a sudden turning into winners for you.
Right. And I mean, VIX has just been screaming. I know VIX has been screaming and whispering in your ear as to why you still have
I'm long right now.
Exactly. We're getting a little bit of a pop today, and it doesn't look like it's over. We might just be getting started on the VIX. So volatility increases. Maybe we see that downward moves in the market. That'll help this SPY position. QQQ is landing right in the bread basket, Gus. This was that $10 wide iron condor that I had. I was like, if we get a sell-off later in the week, it could drop right in that bread basket. I did say if I'm break even or up a little bit on it, I'd probably just take it off. But the way things are looking right now, I might just wait till tomorrow morning. Well, I don't have a choice now. I'm going to wait until tomorrow when the market opens up, see where we're at, and then potentially take this one off. But this was one of those that was very narrow range. And, you know, Elon doing the job for us to get us within that range at least. And then we got NVIDIA. NVIDIA, a little tough one. Still been kind of grinding higher. I got short on NVIDIA not too long ago, kind of on the dance floor. It's testing that the call side that I sold, not testing the one that I bought. 15 days left till expiration. Gonna have to wait that one out. And then we got Lulu. Look, guys, I know it's not looking too hot right now. I know we're down a little bit on Lulu, but if you've been looking at Lulu, especially over the last hour after released earnings, don't worry. We're going to be sitting pretty tomorrow. So we'll go ahead and manage this position. I didn't know how I felt about Lulu. Lulu was going against me right away. And then we got that downside move on earnings. Then we had Disney, just bought a put on Disney. That one's down a little bit, up on the day, but down on the overall position. Hasn't really gone anywhere. And then we have a short position on NASDAQ. If this market continues to sell off, I'm holding this bad boy. I'll take this one off at break even. But I decided to hold this one into the close. So we have a little bit of a cushion on it. But if we can gap down, it would make me feel a little bit more comfortable. But I would love to hold this one a little bit longer just because when we zoom out a little bit, I know we've sold off. But when we really zoom out, we still have more room to the downside. You know what I mean? Like, it always feels like these downside moves, and I was talking about it with Dr. Jim yesterday. It's like these downside moves, we'll get a 50-point, 100-point, 200-point down move, and it's like, wow, we got an aggressive pullback. And then when we zoom out, it's like, wow, the market still rallied from the bottom April 7th around 16,700 in NASDAQ. So if we can get a little bit of a pullback, that'll be nice. Other than that, that's what we got in these positions. Really just going to see how unravels, Gus.
Yeah, it's going to be interesting to see what happens throughout the evening tonight, how that affects Tesla and the broader market at open tomorrow. It's very interesting. We're living in some of the most interesting times ever, especially as it pertains to politics. But yeah, it's just hard to know what to make of these things. I'm happy I'm long VIX is really my thing. I could feel the volatility event coming. And I thought it would have something to do with tariffs. I didn't think it would be due to some Twitter beef, but that's what we're getting. So I guess I'll take it.
It is what we're getting, man. It's 2025. It's just like, man, there's new variables in the market. It's just crazy to me that we could see all this going on social media. And it's just like, you would have never been able to see someone beef with the president 10 years ago, 15 years ago, 20, you would have never seen
outside of political rivals. Yeah. You would never see just a layperson beefing with the president. Yeah.
Right. It's the sitting president, at that, I know Melvin Capital, another example of having to adapt to times. I mean, I guess you don't have to adapt in this way, but even Melvin Capital, right, with Reddit, another variable that wasn't there 5-10 years ago. I know it's a little bit different, but whenever I see social media coming into play into today's age where it wasn't 10, 15, 20 years ago, it's always interesting. That's the word. It's always just interesting to see.
Yeah, So I don't know. And I'll tell you what, too. I spent until about noon today complaining that the market was so boring. And the good Lord heard my prayers, it would appear, because we got some vol now.
And we might get some long
yes.
Oh, yeah. We'll see how the market digests all this uncertainty, all this news. Anything to add before we wrap on for today, Gus?
VIX to 60, and I'm buying a Lamborghini. Also, OKC is going to win the finals. That's my take. In like 6. I'll say in 6. I think that they're too stylistically similar to Indiana. Indiana really tries to make people play their game. I don't think OKC is going to do it. That's my pick. OKC in 6.
I'm going Pacers in 6. Quite the opposite. Number one, I got a little bit of bias, right? OKC's in the West. I'm a Nuggets guy. I'm from Colorado, so I'm always a West guy. I'd rather see someone. I don't want to see OKC win it. I'm not a big fan of the Pacers either. I'm in such a tough spot, but I think that the Pacers are going to somehow shoot lights out like Curry and the Warriors back in 2017, because for some reason they've been shooting like that lately. So I think somehow they're going to get hot on the 3-ball.
Yeah, people have been doubting the Pacers this whole time, and they keep proving everybody wrong. I would love to see it, and I love that we got 2 small market teams in the finals, and somebody's winning their first finals, which is also awesome. So it's a great matchup.
That's going to be exciting. Anything else before we wrap up for today, Gus?
No, that's all I got.
Cool. Well, that's going to do it for today. Thanks for taking the time to hang out with us, guys. We'll see how this market fiasco plays out, and we'll see how these earnings play out tomorrow. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. You know, that's what I do.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
I'm running Snow Leopard with this.
I'm a Mac. I'm a Mac. I'm a Mac.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Yeah, it's Thursday, June 5th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's Evening Show, a little podcast, a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. And good golly, Miss Molly, did they throw a bunch of incentives at us over the last couple of days to chew on. More on that in just a bit. Before we get there, let's say what's up to everybody out there. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. But if you want to be part of Bing, this little chat box on your screen, there's only one place to do it, and that's on the evil Google YouTube. So head on over there, find the Tasty Live channel, subscribe, and your thoughts, both appropriate and otherwise, will be featured on this little chat box right here. Try to keep it somewhat appropriate. I'm sure there's going to be lots of disagreement today, but do me a favor. Let's keep it respectful no matter what you do. Off, and away we go. Shout out to everybody that's already in the chat. You know who I'm talking to. Laid back trader Brian Watson, the GOAT of YouTube. Mark, how you doing? Tungsten, great to see you. Al-Haji, hopefully I got that right. Katan, good to see you again. MP, what's up? Mark, Victoria, and so many more. Shout out to all of you. Do me a favor, you know the deal. Get those phalanges, those metacarpals moving, bash your face into the keyboard. Do whatever you can do to create random ass characters in the chat. The more you type, the more you spoof the Google algorithm into putting us in front of as many people as possible. And off and away we go, my babies. Let's talk price. Obviously, we've got a little drama upon us, and I kind of wrestled with the idea of whether or not to get to the drama first and lose half of you, or to wait and do the drama last and make all of you wait 90 minutes to get to that part of the conversation. I don't know that I've made up my mind necessarily. Let me know in the chat if you want me to talk Elon Trump at the open or at the close. S&P 500 down 0.5%. Talking cash, my babies, down about 30 points on the day. The NASDAQ down 0.4%. The Dow Jones down about 0.25%. The Russell down 5 basis points. AI gone wrong says drama sucks. I don't know, man. That's kind of what we live for. Isn't that what we do here? We're all just, you're either a seller of the drama, a buyer of the effects of the drama, right? That's pretty much what we do here. If you're anything other than that, you're probably not successful. Banna says, spill the tea. Demi says, your besties are breaking up. Trader says, I want the beef. Middle of the show for Elon, says Brian. All right, I'll do an open here, and we'll get into my take. It is trade. I think it's somewhat tradable, I think. I think. VIX down at 1848 and change. Talking cash, VIX, my babies. VIX futures, front month future at 1986. The VIX term structure, not doing much. Obviously, a little bit of a red day. Me personally, I don't think you freak out here just yet. I do think you're at the upper end of a few ranges, right? You're at the upper end of the S&P 500 range, and a Xi Jinping and Donald Trump phone call today. I thought it was interesting too that Xi effectively says they're open to Donald Trump visit. I couldn't figure out if that was like an honest invitation, because I haven't had much time to go through that whole back and forth. There was so much going on today. I didn't go through the whole back and forth in earnest. So I suppose today I'll figure out a little bit more of what was said. But my initial read was I can't figure out if that's just an invitation or that's sort of a power play. It's like everyone else went to Mar-a-Lago and they kissed the rings, but if you want to have a conversation, my guy, jump on a plane, we'll see you in Shanghai. Something to that extent. I don't know. Bonds at 113. Let's cover bonds, and then I'll go into is it time to fade the MAGA ETF? I think that train has that train already left the station, right? You had a honeymoon period post November 5th. The market faded that. You got a little bit of sort of a retracement of that fade. And some of that trade is now coming undone, at least in Tesla. More on that in just a bit. Bonds. Let's start with the long end, 113 and 13/30 seconds. So effectively 113.5 came off a little bit. We were up in the 114s, baby. I was feeling real good this morning. I'm feeling real good about trying to diamond hand this thing up to 117. This is such a stupid hero's call. We're not going to 117. But every once in a while, I like to take a little bit of money and just light it on fire in the interest of low probability, high payout scenarios. And every time it doesn't work, I say, I'm going to get them next time. I don't learn my lesson. But 114 is pretty good work for being at 109 and 20-30 seconds not long ago. I'll take it, but a little bit of a blow off here. A little bit of a blow off at 114. Not the sexiest price action I have ever seen in my life. Let me refresh this for you. We'll head back. We had jolts on the screen from yesterday or 2 days ago, really. Come on, there we go. The big ones, of course, claims came in a little bit hotter than expected here this morning. 247,000 versus 235 expected. Not a huge mover, but it's ticking up, man. Productivity and cost came down 1.5% versus the 0.8% expected. And the big one tomorrow, and the jobs report, consensus 129,000, 4.2% unemployment with a 0.3% month-over-month increase in real wages. I don't know. Did anyone see is there a press conference already scheduled from the administration for tomorrow? That's usually like, if I'm not mistaken, they get these reports like a day ahead. And Biden used to have this tell where they would basically schedule a press conference the next day. And he didn't do many of these things. So if you got a press conference on the day of an employment report or a CPI report, you probably could bet that report was swinging in the direction of the administration. I haven't checked the White House schedule for tomorrow. Maybe they don't want to be that transparent. Maybe Bessent kind of helps them out a little bit, not to be so transparent. Notes at 110.25 ticks. Effectively the same price action. A little. Let's take a look at the CME Fed Watch. Not much change here, man. And I don't know that there's going to be. Powell's just sitting, bro.
They're a little bit firmed up here. They firmed up here at the September rate cut. Starting the rate cuts in September, they firmed it up a little bit in terms of probabilities and price. Second one still coming in December. Third one coming in March. Fourth one coming in July. They did put a third one on the table in 2026. So we had a little bit of change since the last time we had a discussion on, what was that, Tuesday. An additional cut priced in here until the end of 2026, still only 2 for the remainder of the year. And I don't know, man. September, wait a month, go again in December. I don't know. If you gave me an over under on one cut this year, I'd probably take the push. I don't know that I'm taking the over yet. Jobs number a nothing burger ? Says Mark. The number itself probably, but it doesn't mean it can't be a catalyst to price action. You know, like, do I think, if the question is, Mark, and it's a good one, do I think if we get 150,000 versus 130,000 expected, is that like this gigantic change? Or if we get 115,000 versus 130,000 expected, or even 80,000, like I don't think those things are hugely material to the economy necessarily. I don't think they're hugely impactful to the fair value of assets at any one point in time, but they certainly can swing emotion. And depending on positioning, you know, people might be too off sides here in one direction or the other, and this could be a catalyst to take advantage of offside positioning, I suppose, Mark. But I personally, honestly, unless this thing is like 100,000 over or under, I don't think it really changes my point of view of what's happening when I look outside the window. And so with that, you know, if you get a big swing on like a 30,000, like plus or minus 30,000, you get maybe a 1.5% move, which is outside of what implied volatility is telling you to expect right now. I think that sets up the opportunity to fade at least some of that move. That's sort of the way I look at this stuff. Don't know if that's helpful or not. I wish I could come in here and tell you that, to me, in my opinion, this was a really big deal. I just don't see it that way. I don't see a lot of this stuff as being big deals right now. I think when you get into a position where you're flirting with fiscal dominance, it's like fool me once, shame on you. Fool me twice, shame on me. Okay, so if through the Biden administration, if you didn't see the power of fiscal dominance, and you didn't see how many people looked at the rates and didn't see what the potential offsets were to higher rates, I don't think the market is going to do the same thing twice. That also has impacts reflexively of how price and positioning will ultimately, how this game changes through reflexivity. But I think the game right now is fiscal dominance, which leads us to this conversation. So Elon Musk and Donald Trump got into a big spat today. And, you know, I would say it effectively started from my public perception, and a lot of this obviously is probably private, happens behind closed doors, but my public perception is that Elon sort of started with this public campaign against the big, beautiful bill, which good on him, because I think it's a one big, beautiful campaign, broken campaign promise is the way I look at it. And it seems this day by day has been escalating. And it sort of spilled over today. Elon saying that Donald Trump is in the Epstein files, and Donald Trump saying that Elon is just pissed off because he didn't get the EV subsidies. He's saying Donald Trump took away the EV subsidies, and then Elon just flipped out. He lost it. So let's break this apart. I have no real interest in getting into the tit for tat drama between the two. I'll do that on Twitter. I'm not going to do that on air. But I think what's interesting and tradable about this. So I think Elon is going to be really effective at putting a material dent in the political favorability of the Trump administration. I think from the people that voted for Donald Trump and put him in office, I think they were voting for institutional reform. I've said this on the show a couple of times. They were not voting for culture war wins and gigantic deficits and wealth transfers. That's effectively what put Donald Trump in office, because the people felt like the last 4 years were a gigantic wealth transfer just through a different mechanism. And so I think Elon Musk is going to be fairly successful at running a political campaign, not only against Donald Trump utilizing the pulpit on Twitter, but against this bill in the Senate. I think and if so, then I think he makes it really, really difficult for a lot of Republican senators to stamp their name on this bill as is, without material reform. Not reform, let's just say without material changes to the bill. So I would say the probabilities, I thought there were very low probabilities of this thing getting changed at all. And I think without Elon speaking up, honestly, I think they would have rubber stamped this thing. I think they maybe would have made one or two changes. Maybe they would have put the SNAP money back in the bill, stuff that is like immaterial, but like is a feel-good story. I think they probably would have done something like that and then shuffled it along, and he would have signed it. And I think what Elon is doing right now is making it very, very difficult to just rubber stamp this thing along. Without material changes to it. So some of the holdouts like the Rand Pauls of the world, the Ron Johnsons of the world, the handful of others, I think Elon probably gave them more political clout and leverage to stand pat. And I think, so that's number one. I think however you're pricing the big, beautiful bill getting passed in or discounted as is into markets and into market pricing, I think your tail of a material change, I think it just grew in probability. So that's number one. Number two is, how does Trump respond politically to Elon Musk? I think that's another question. Why is it a question? It's a question because of what Tesla stock just did today. Tesla down 14%. That's an anticipation of retaliation. That's an anticipation of lost government contracts. That's an anticipation of lost progress on robo-taxis in Texas and throughout the rest of the country. This is an anticipation of retaliation. So in my mind, what I try to ask myself is, okay, some people they just have to discount. They have to discount these probabilities. And so do I. But then my responsibility is to play this through. Okay, so there's one option on one side of the spectrum is for Donald Trump to pull a Joe Biden and to put the weight of the DOJ as well as the contracts that Donald Trump has threatened to take away from Elon Musk, is to put that on one side of the spectrum, which is a full-on retaliation of the DOJ and the Trump administration against Elon and the progress of Tesla, Starlink, Neuralink. I keep going on. But that's on one side of the spectrum. The other side of the spectrum is a bit of Trump capitulation. It's to recognize that Elon is he's being effective at changing the public political favorability of the Trump administration, if he is, and I think he is going to be. And it's also to put the fear of God in some of these Republicans that are in areas where they can be contested, because he's threatening to spend money and sort of primary a lot of these people out. So that means it's a little bit more difficult to just rubber stamp this stuff along. And I think because all of those things could be politically effective, there's a potential, I think there's a slight edge to a truce, to sort of a Trump capitulation and ultimate truce between Trump and Elon. And I think if that's true, I think today's 15% discount in Tesla is a really, really interesting nibble. Sort of, I'd bet the truce is what I'm trying to say. And I did bet the truce. I think going the other route is really difficult because you're going to frame not only yourself, but the entire Republican Party as you don't care. Not only do you not care about the deficits, but you're going to weaponize the DOJ against political allies that have a different policy opinion. And I think that would be catastrophic for that party. And I think they're smart enough to know that. So while there will be a lot of bluster in the public, I'm not really sure that they're in a position to attack Elon the same way that the Biden administration did. That's my first read. I can be totally, totally wrong. So, is 284 the right price? Is 220 the right price, or somewhere in between? Obviously, no one knows. I can't know either. I think with all of the things that, so what's in the Art of War, right? I think the book says something like, don't open up multiple fronts. Don't fight two enemies at one time. I don't know. It's something to this extent. And I think if you're trying to make peace in Ukraine, you're trying to figure out Israel, Gaza, you've got the Houthis, you have literally an entire globe you're trying to redo trade negotiations with. Do you really want this little spat with Elon going on the side? Do you really want to have to deal with that while you're trying to do what you feel like are all these bigger issues? I don't think you do. Now, here's the other problem. So again, so my point of view and perspective is I think the slight edge of political action leans into an upside relative bet in Tesla. I don't know what the low price is, but 15% is interesting to me already. So here's the other thing. Oh, I forgot where I was going to go with that one. That was the more important topic. All right, let me see what you guys got. I'll find it. Victor, all in on Tesla calls. Not necessarily. I've got Tesla's one of my biggest equity positions. I have downside puts. So I suppose synthetically I do have long calls, I guess, Noah. It's a synthetic position. Didn't Trump wait a couple of days to respond to Elon's criticism of the bill? If so, why? Yes, he did. I think Elon ratcheted up his criticism to an extent that I think he feels like he has to respond. And that's actually where I was going. So if the response is from Trump that he took away Elon's subsidies and he freaked out. Now, I don't know if this is going to work. I don't know if this is going to play with the public, people that aren't paying attention, people that don't know any better. But if you remember, as prior to and as the administration came in, post-election, everybody was saying that one of the reasons why Tesla was rallying was because of EV credits and because Elon was close to Donald Trump, and that was effectively going to mean that he would be able to dictate more EV credits. And on this show, you can go back and check the date. I don't know what the date was, but I said that's wrong. What benefits Elon's selfish interest right now is to remove the EV credits, which is why Elon eventually called for the removal of the EV credits. And I'll explain why that is. In the U.S., Elon Musk used government subsidies and credits to build up his business and get through an excruciating J curve to get to mass production of these EV vehicles in an autonomous way, in a way that nobody else had done before, and without unionized labor, without marketing. And he's now has an established business model with market dominance in the United States with the wealthiest consumer. Do you want competition now that you've bootstrapped yourself up into market dominance? You don't. And the whole point of regulatory capture is to create a moat around your business. Sometimes that moat is getting money from the government. Other times it's making it really hard for new entrants to come compete with you. So you create a bunch of regulation that makes it harder or more expensive for new businesses to even threaten your market dominance. In my personal opinion, removing the EV credit actually is the most beneficial to Tesla in the United States. It removes the potential price pressure or price competition. It removes the government assistance from companies like Lucid and Rivian and a handful of others, even the big three automakers, as they attempt to build up and challenge Tesla's market dominance in the United States. So when I see Donald Trump talk about Elon flipping out because he removed his EV credit, it's like instant lie. And so it was very ill thought out. And he's using it in hopes that the public is not informed enough about this subject. And they'll, I'm sure there are a large swath of people that will say, yeah, that makes sense. They got rid of his credits and he's pissed off. I'm sure there's people that will make that seems logical to them and they'll go with that story. But in reality, I don't think it's going to play with the people you need it to play with. And so I think it was a bit of a misstep. It wasn't a good political calculation for the story. And I don't think people are going to go with it. And which ultimately means I think I still give this edge to them at some point calling a truce. And I wouldn't just throw Tesla equity down the drain. I don't know. But isn't it funny? Isn't it funny how if Elon challenges the incumbent political structure, the Tesla stock gets murdered. His wealth gets absolutely destroyed. In the previous administration, his pay package was rescinded twice. His stock was down to like 170. It's funny how that happens, right? And in this administration, if you go after fraudulent spending without even going to the Pentagon, mind you, all of a sudden your dealerships are set on fire and you walk away. And if you try to challenge this big dumb bill, you lose 14% in a single day. It's almost like markets are holding us hostage a little bit. Anyone else getting that feeling? Anyone else reading between the lines and see, like, if a Liz Truss comes out and says, hey, this is how I want to run my country, something blows up and all of a sudden Rishi Sunak is in office and no one can find Liz Truss again? If Elon Musk, the world's richest man, wants to say something, all of a sudden his stock plummets 15%. Anyone find this interesting? Laidback Trader says, never get in politics. Soul Train says, please stop, Victor. Regulation is mostly built around safety and environmental reasons, not personal ever. Elon is pissed about Doge and new bill negating his efforts. Yeah, I don't know. I don't really know. Some part of me goes, there is a part of my brain that's crazy enough to go, this is all manufactured drama. And I'd have a lot. I would, if Elon Musk signed an attestation or an affidavit that said that he nor anyone in his business or affiliated with this Doge effort took any of the Social Security data and ingested it for the purpose of ingesting it into an AI model, either now or into perpetuity, I'd feel a lot better about his arguments. I'd feel a lot more comfortable. But just, you'll have to forgive me. That I don't trust things on their face value anymore. It's the whole concept in our generation of trust but verify. I'm down to go with. I've been saying on this show way before Elon said anything about this bill, I don't think it's a good idea. I read through it. I had Grok summarize it. The pork in this bill is mind-blowing. It's completely unnecessary, some of the things in this bill. And I cannot believe that everyone's just going with it. And Bill Ackman said something today, something to the effect of, can't we all just get along? I'm gonna bring it up. I thought it was such a bad take. I don't know. Bill Ackman's hit and miss sometimes. But his take was, let me get the URL. I support real Donald Trump and Elon Musk, and they should make peace for the benefit of our great country. We are much stronger together than apart. And I get the sentiment of, can't we all just get along or whatever, but also, no, bro. If you have why is meaningful political disagreement a problem? Why do you need to have political disagreements or policy disagreements behind closed doors or outside of the public eye? If Bill Ackman believes that Twitter is the public square, why wouldn't these two gentlemen be having it out in the public versus a smoky back room where they make a deal that nobody is privy to and has to figure out through the tea leaves of how money is moving, do effectively financial forensics to try to figure out where everybody's incentive structures are leaning? No, bro. If people have policy disagreements, is it not refreshing to see these things play out in the public, assuming it's not all some big psyop? I think it's refreshing. And so long as in hip hop, there's a saying, so long as it stays on wax, it's fine. What's the problem? I see no problem with this. I think the Epstein file thing, I don't know, if true, why wouldn't you want to know that? There's enough photographs to there's enough photographs for it to be credulous. I guess I don't want to get into the messy stuff. My whole point is two things. One, I think Trump's angle on this is weak. I think it's easily refuted. I think all smart people and markets are going to see through it. And I think you need the markets with you on this. I also think that what Elon is doing is going to have a meaningful impact to Trump's political favorability. And it's not just Trump. It is when you promise, and everybody knows these campaign promises are about as good as the air, the breath that they're spoken with. But when you promise to solve a gigantic conflict first thing, and you're 150 days into your presidency, and it doesn't look like we're anywhere closer to that goal, when Kash Patel and Dan Bongino are making complete fools of themselves, doing complete political 180s, when RFK Jr. looks completely feckless in his role in HHS, like he's not going to do anything with healthcare, with that end of the mandate. He's just going to attack stupid little petty food issues like food dye. When it looks like Pam Bondi's trying to pull the wool over everybody's eyes, making some big celebration about the release of an empty binder. People voted for institutional reform, not media stunts. They voted for institutional reform, not culture wars. And I think there's this ember there. And if Elon Musk presses the button, that ember is going to turn into a wildfire that's going to turn into a real big problem for Donald Trump, whether he sees it or not. People are frustrated with how this 150 days are going, and if given the opportunity, they're going to voice that frustration. For that reason, I think Bill Ackman's take is Charmin soft. I have no problem with political disagreements and political dissent, regardless of who you voted for in the public square. I love it. I think it's refreshing. I think we need more of this. I think it should be a demonstration to the DNC, who effectively makes everybody fall in line, regardless of what you believe. David Hogg, I don't know why I'm doing this to myself. David Hogg won the DNC vice chair, okay? And just shortly after winning the DNC vice chair position, he said he was going to use $20 million in his political action party. He's going to use $20 million to primary Democrats in safe seats. What he was effectively saying is, Nancy Pelosi, you're too old. It's time for a change of the guard. What he's saying is, Chuck Schumer, it's time for a change. That's what he was saying. And after he said that, all of a sudden, his vice chair position was challenged, and he's likely going to be thrown out on. There's a vote on June 9th or June 11th, which is going to throw this young kid, first Gen Zer to be voted for this position. He's a survivor of the Parkland shooting. What was that, 7 or 8 years ago? So 7, 8 years ago, this kid survives the Parkland shooting. He decides to go into politics. He leaves Harvard. He starts a political action committee. He does it the right way, okay? He's not Elon Musk. He's not Reid Hoffman. He's not Mark Zuckerberg. He's not buying political influence. The guy got into politics to make a difference, and he's working his way up through the ranks, and he believes that the Democratic Party needs a change. He got caught on video as well, talking about Nancy Pelosi's insider trading, saying it was a clear and obvious problem. Nobody's doing anything about it, and that's why we need to primary people like her out of office. This is what the kid said. And all of a sudden, on June 9th or June 11th, somewhere between that date, he's going to get voted out. So, like, if you can't make change inside the system, you can't spend money and make change, which it seems like if you take Elon Musk at face value, and I think you should be very careful about doing that, that the incentive structure of this uniparty train that we're on to just continue to blow out deficits, it's somehow bigger than, it's a bigger issue than the world's richest man can influence right now. That's saying something. Yeah, and I have no issue with this being out in public, but though I do think Bill Ackman's going to ultimately be right. I think they're going to make some sort of truce. And so I look at Tesla, this drop in Tesla, as an opportunity. And if I'm wrong, which I totally can be, I'll have to come on here and say I totally misread this scenario. What I will say is I thought there was a low probability with it. I didn't think in 150 days that these two would be going at it. So to Tom's credit, he called it. He did call that eventually this relationship was going to sour. And I didn't think it was going to happen in the first year. I certainly didn't think it was going to happen in the first 150 days. So to Tom's credit, he did call it. Where do we go from here? I'm not sure how ugly this gets, but I'm sure they don't want. I'm sure they don't want this messiness. At the same time, Trump is trying to challenge tariffs in court. At the same time, he's trying to navigate and negotiate two major world conflicts and global trade balances to boot, and also trying to fight against a Fed chair who, again, if you take the public narrative at face value, is holding the line against what the administration ultimately wants, which is lower rates. I don't think they want this problem. So anyways, we'll see what happens, man. I might be wearing a bunch of Tesla. I might be wearing a bunch of Tesla at like 2.5, at 250, somewhere around there. So we'll see. Did I lose everybody? Not bad. I kept most of you. All right, let's see what you guys are saying, and then I'll keep going to other topics. Let's see here. Agreed. I bought a little bit of Tesla around 280 during today's Jerry Springer episode, says Donna. Donna, you and me both, my friend. You know, either we're going to Sizzler in 30 days or, you know, we'll be sharing a tent somewhere. Tom Banjo says barrier to entry. I think so. Elon is pissed about Doge and the new bill negating his efforts. I'm not sure. You know, if you only found 160 billion, but your goal was to find $1 trillion, you know, he never even went to the Pentagon. And some part of me thinks that was like a self-preservation move, right? If they're blowing up your dealerships over Social Security, what do you think they're going to do if you're finding fraud in the Pentagon? Bro, you are going to be disappeared so quick. So some part of me thinks, like, I kind of get it. Elon thought he could buy Trump for $300 million. Here's the thing. If you measure the rhetoric on both sides, put the rhetoric of Elon on one side, put the rhetoric of Trump on the other. Trump's rhetoric to this point doesn't come anywhere close to matching Elon's rhetoric. Unless I miss something. Trump's rhetoric is Charmin soft right now compared to the bombs Elon is throwing. But he's got the golden key and the Illuminati black eye. Mark, that was like the first thing I thought too. That black eye was a show of like, okay, I'll play. Rally my stock now. So I'd be lying if some part of me didn't think that. Tesla back in its down channel if it closes this week here. Yeah, I can see that. I don't know. To me, sometimes that's all subjective, you know. You know, does that look like a down channel? If I zoom out far enough and go weekly? I don't think so. It's all, sometimes this stuff is subjective, and it's all based on the time frame or fractal you're looking at. This proves that the market has become less about fundamentals and growth, more about politics and pop culture. I would, again, my read here, JM, if I'm right, and I don't know if I'm right, my read is you have to discount a material change to the bill in Senate. And if you discount that, that means less money, less deficit spending. And less deficit spending means less money going into the economy, which ultimately means that money doesn't find its way to assets ultimately, most of it. So maybe I could make an argument that there's a fundamental read-through on this too. Because if you believe, like I believe, that the probabilities of meaningful change to this bill go up, then you have to discount what that means for equity prices. And I could be way off on that. Some really smart person who's been in markets for 30 years versus my 18 could say, Victor, this is random and you're wrong. It's narrative fallacy you're assigning to price move or something else, right? There's something deeper that I'm not understanding. That's my read today. Give me 10 more years of experience, I might have a complete different read. Give me 10 less years of experience, and I would definitely have a different read. Palantir got all the data. I mean, the truth is we've given up all of our data. So your only protections right now are the laws on how that data can be aggregated and sold. So if we make it a lot easier to aggregate this data, to sell this data, to centralize this data, especially without your consent or without your remuneration, then yeah, man, this is a slippery slope. And they do have your data. The only question is, okay, what laws do we need to pass to make it easier for me over here to share my data with you and you to share your data with me? I need to get my hands on the healthcare data that the Health and Human Services has. But Health and Human Services doesn't have centralized data. So first, let's go make them efficient, centralized all the health data, and now we can figure out how do we integrate as a private company with the public health data. I don't know. Maybe that's some crazy conspiracy theory part of my brain, or maybe that's exactly what's happening right now. That's why you put, what's her name? Is it Casey or Callie? To me, those are two girl names, right? It's Casey. That's why you put Casey Means in. All right, let's keep cruising. Victor, Elon Musk against pork in the budget unless it's his $7,500 incentive. Again, AZZ, I think that's wrong. I don't think he gives a shit about the tax credit. I think they're going to remove that. I think he wants them to remove it. And I think it benefits him to remove it. I do think that the defense contractor stuff he cares about right now, I think the more over the next 5 years he is able to integrate in with the Defense Department, the more entangled he becomes, the less a future administration, whether Democrat or Republican, is going to be able to attack him politically. So I think it's a defensive move, and the inability to do that is going to put him out on an island. I think he knows that. Again, I could be way off here. Why is the market, including SPX, NDX, so sensitive to Twitter wars? Don't get it. Fiscal dominance will fiscal dominance. I think that's probably true. I think that's the path of least resistance. All I'm saying is the tail where Elon's antics have some material political enter the political calculus in a material way. I think you price that. I think that pricing goes up today. That's the way I see it. Please don't take my red 40. All right, I'll do a couple more and then I'll move on. Did you guys see? No, I didn't see that, Aaron. Donna says, David Hogg is from my area and he has always been a piece of work. Parkland High School is a few miles down the road from me. Piece of work as in? Usually I think that has negative connotation, but I'm just making sure. I wonder what Trump will do with his Tesla car now. Why do you think the taco trade isn't working on Apple? Because the taco trade is not real. The taco trade is a media construct to dig at Donald Trump. I don't know why I typed in taco. Like at the beginning of the presidency, they made up this whole thing about this spat between Elon and Trump. Sometimes these stories have an audience of one, and the taco trade has an audience of one. Taif says, Victor, it's all part of the fourth turning. Folks don't want to believe the lost decade concept, but just look back at what has happened since 2019 to 2020 so far. Yeah, man, we are in a state of financial repression. And all of this stuff is great headline. It's great fodder. It's great political theater. But perhaps it's all to distract that we are going through a long period of financial repression. The same thing we saw in the 70s, the same thing we saw in the 40s, appears to be happening right now. And gold knows it. And today, silver caught up to this idea. Now, the problem here is, what do you do with silver? I know I'm jumping topics here, but I'll come back to that if anyone has any other interesting points of view or takes at that whole angle. But it's supposed to be a trading show, not necessarily a soap opera. And so my trading angle, I think the Tesla dip is worth a small risk-defined upside bet. And that's how I'm playing it. That is not a recommendation. That's just how I'm playing it because I think the political calculus leans towards them making a truce sooner rather than later. Especially if the Epstein thing, because I have to imagine, all right, the last thing I'll say, I have to imagine if you're going to back a guy and put him in office, sort of stake a lot of your personal and professional reputation on him at the expense of your existing company, your baby, you know this is going to alienate a lot of your existing customer base, U.S. customer base. You don't do that without some sort of leverage. So if it's a control file, some sort of compromise, if it's something, If I give you this, I'm going to get more than a political promise. I've seen you, dog out Chris Christie. I've seen you, I've seen you do a bunch of stuff. I'm not taking you on the arm. I'm not taking your word for this. So you do it with some sort of leverage. And the question is, what is that leverage that Elon has? And is he a savvy enough political player to do what he's doing at this level? I don't know. We're going to find out. We shall see. All right, let's keep moving on. Back to silver. So huge continuation of a move here in silver. God, I love it. I bet it all on silver a few months ago when I was talking to you guys. Not a few months, but let's call it within the last 6 weeks. I kept coming back to you and I kept saying, this is the hill I die on. This is either going to work out fabulously or you're never going to hear from me again, and I'm going to disappear into obscurity. 32 to 34 established range. I kept flirting like it wanted to break out from 34, but 32 kept giving us value. So we kept loading up on silver on the low end of that range, on the hope that we would get an upside breakout. It's a guess. Why is it a guess? At the time or throughout a period of time, we had a 70% probability of recession that was priced into the markets from the smart economists who always do a great job in accurately predicting future recessions. So at 70% recession, gold had a monetary premium, trading somewhere between 32 and 34, depending on which point in time you're taking. And so the bet is that if those recession probabilities unwind, the bet is that the gold-silver ratio will normalize. But we took an additional bet. The additional bet was that the monetary premium from gold wouldn't disappear if the recession probabilities eased. So instead of doing the gold-silver ratio, which was to sell gold and buy silver and just play the relationship of them, I did a total naked bet that said, if you move recession probabilities down, you have to reprice your industrial output, which means you have to increase the price of silver if the price of gold continues to stay sticky, which I bet it would. Luckily enough for us, and I was probably wrong on all of my reasoning, and sometimes it's better to be lucky than good, we have seen a drop from 70% probability of recession back down to 30. We saw gold keep its relative range, 33 to 3,400. And so the market reprices silver higher to get back to a more normal relationship between gold and silver. And that gave us a really beautiful upside move from 33 straight to 36 and change. So what do you do now? That's the bigger question, because what happens now, because nobody talks about silver, right? Until it has this gigantic move, because the silver in beta is disgusting, or the beta in silver is crazy. So when silver moves, it moves a lot and it moves fast. So this becomes a really interesting headline that gets picked up, and now everybody starts talking about it. When everybody starts talking about it, it's usually after the move, and they get to show up at the party just in time to provide exit liquidity to everyone else who's been in the trade. That's the way the game works. So I personally took some of my upside calls, spreads, starting at like 34.5 that were deep out of the money at one point. They've now gone in the money. And I rolled some of that stuff up and out starting at the 36 strike now. Not because I necessarily think it's going to go higher than 36, but because I wanted to capture some of the profit by going to lower delta upside strikes. I took some of my long calls and call spreads off at credits. So I'm taking money off the table. The second thing I did was I had upside futures exposure. I took the futures exposure down by 60%. Do I think the move is over? I have no idea. I honestly have no idea. I didn't know silver was going to go up. I just took a bet, and the bet paid. But I do know we're at the top end of silver's range, and I do know that everyone's going to start talking about silver now. I don't want to take everything off. Why? Because if you get a breakout of 36, you're in sort of really interesting new territory for the last 12 months. Maybe we can get some of the zero DTE players, all this hot money to come play in the silver pool. And who knows what they do with this thing. The funny thing is, if that happens, I swear the last two big silver moves, they ended the same exact way. I'll tell you how they ended. You can check me if I'm wrong. Any one of you can go check this on AI. But the last two really big silver moves, if I'm not mistaken, they ended with a change in margin requirements. So the exchange will increase the margin requirement in a really material way. And because they boost the margin requirement, it makes it harder for people to hold the same level of exposure without topping up more capital. So instead of topping up more capital, most people choose to start selling their position so that they don't have to increase margin requirements or increase the amount of capital of the trade. And the trade sort of unwinds from there. If I'm not mistaken, the two last huge silver moves, that's what popped both of them. So if this thing gets even more likes than the TAD, I'm going to keep exposure on here. That's my point. I'm going to keep exposure on until either the gold silver ratio no longer makes sense or until we get some announcement from the exchange that they're materially increasing the margin requirements. And in that scenario, I might not even just go flat. I might actually flip the position to short. I'm going to stop for just a second, see what you guys are saying. Rob says, how dare you look back and gloat, frankly, when Jake Daffer and KGP are writing memoirs confirming what the rest of us knew years ago. Tom was right to yell incoherent lib cope at you this morning. I don't know. I was hoping to because I do think I don't know. Yeah, it didn't go the way I thought it was going to go. Put it that way. I thought the conversation would go a little bit different. I thought, I don't know, if I was a CNN viewer, I think I personally would be pissed. And the reason I'm saying this is because I previously was a CNN viewer. And I don't know what this says about my intellect, but I was. And COVID changed everything for me. It's sort of, I was able to see oh, these are the tricks that you guys do. And how did I fall for that? And why wasn't I being more objective? Why wasn't I searching out these sources? How did I let this web of confirmation bias surround me so that I was always hearing the opposition framed through this mouthpiece instead of going out there and experiencing the opposition and their words and the whole press conference without the clips, without the narration, without the panels, without the anchoring. Why didn't you do that? You sort of just assumed these people were telling you the truth. Why would you make that gigantic leap? And so anyway, so when that happened, it was this big watershed moment for me for like, oh, this is how you saw the world. This is what the world actually is. This is how you saw the role of these people. This is what their role actually is. So to me, sometimes these moments in time when Jake Tapper comes out and he does this complete 180, or Karine Jean-Pierre says, I'm leaving the Democratic Party as a media stunt to sell her book in October, and talks about a broken White House that she's a part of, the communication, the mouthpiece of. I would imagine for a lot of people, that's their moment, their watershed moment of going, hey, man, you guys lied to me. You told me this. And I believe that. Not only did I believe it, I argued fervently on this at this point because I believed in your credibility and the institution of your organization's credibility. And I feel lied to. I feel betrayed. I feel a bit foolish and naive. I owe some people apologies for the way that I spoke to them and I spoke about these issues. I owe myself sort of a rethink of where I'm going to get information and how I frame the information that's coming in, how I see the other side, the sources, incentive structure that's coming in, no matter if it's Reuters or Axios or Politico or CNN or Fox, everybody has an incentive, and I need to frame that properly as the input's coming in. Even podcasts, you know. So I was kind of hoping, I don't know, I held out that perhaps this was a moment, or we're going through a moment where even more people wake up to what's happening and what people's roles are in the world around them. But, maybe I was premature on that one, premature for that convo. And I don't think I did it. I do think it came off more as gloating than an honest invitation for introspection. So I think I missed the mark on what I was trying to do. It's what it is. V, you like silver because solar. Not necessarily. It's more relationship than anything. I'm a big dumb idiot. I know what how important some of these metals are to electric and solar and all this stuff. And there is a case, if you look at PBW, and a lot of these solar stocks are very quietly rallying and coming back into favor. So, I mean, that case was there, that from April on, you had this massive rally in all the electric stuff. But no, that wasn't it. I wish I could say that was some part of my thinking. It wasn't. It was pure relationship between gold and silver and a changing recession call. Donna Ski says, I sold some of my SLV shares today, lightened up and took some profit. Same here. Elon said about an hour ago that recession is back on now. Yeah, he said Trump's, I think it's direct claim, and I'll try to find the tweet. I think he said Trump's tariffs will cause a recession in the second half of this year, if I'm not mistaken. But see, the problem is, again, and this is what, I think this is what everyone misses. It is not, I don't believe this cycle is so simple. So here's what people want to do. Here's the simple read through. Oh, it's a recession. I'll buy bonds. Has that worked out at all? That thinking. Even when there was a 70% probability of recession, what were bonds doing? They were getting punched in the face. Because we're already at 6 to 7% deficit to GDP. And a recession would just widen that. So, in my personal opinion, deciding what to do with risk assets isn't as easy as deciding whether or not we're going to go into a recession or not. We had 2 quarters of contracting GDP throughout the Biden administration. What did risk assets do then? I mean, we did come off 25% from peak to trough. Where did we end, though? What was the response? What was the fiscal response to that? And I know that the Ember didn't necessarily declare a recession, and you could say, well, GDI was doing this relative to GDP. Okay, sure. But I'm a simple guy. I'm a really simple person. I ain't had much learning, and you'd give me 2 quarters of contraction, and that's good enough for me. But at the point where you got the confirmation of the second quarter, risk assets had already bottomed at like 34, what was it, 3,400, something like that? And it already turned around. So to me, I think, again, the recession talk is interesting fodder. I think it applies to people and their jobs and how they think about spending. In that way, it's perhaps self-fulfilling. But I don't think it actually helps you navigate what to do with risk assets right now. I think it's going to be fool's gold. There is a scenario where you call the recession and you get your face ripped off to the upside. That is a legit possibility. I think liquidity is the thing that kills that. Here it is. Oh, my baby girl's in the background. All right, here's the exact tweet. So somebody says, "Can I finally say that Trump's tariffs are super stupid?" Elon quote tweets, "The Trump tariffs will cause a recession in the second half of this year." It was a pretty good day until Trump versus Elon fight tanked the market. It will recover. It will recover. Why? Why that much confidence? I'm curious. I don't know that it will. I don't know that it might recover. I think it might recover. I think you have to ask yourself, like, from where and from when, though. Is 6,000 a good price? Let me go through a couple of charts with you. Okay, in the S&P 500, 30% of the market cap comes from a handful of stocks, right? Let's look at them. Microsoft, a good value right now? Yes or no? Meta, good value right now? Yes or no? Apple's going to be a slightly different story. Google's going to be a slightly different story. I think I'm just talking myself into buying Apple and Google right now. Tesla, another one. Nvidia, another one. Is that a good value? No. So if it does recover, if that were my point of view, that the market recovers here and that we push higher into all-time highs, what do you buy? Do you buy more Nvidia? Do you buy more Meta? Do you buy more Microsoft? Or do you take a bet on relative value and look at something like Apple or Google and Tesla? I would probably, if I'm going to bet the upside, I'm looking at stuff like Apple, Google, and Tesla. I don't know how you bet even more upside here on Nvidia, Meta, and Microsoft. Like it'll recover. I'm going to bet the things that are already at or near all-time highs, because that's not how other people are going to think. Even if you think that way, it's not how other people are going to think. They're going to think, where can I get the most bang for my buck? Where are the deepest discounts available on a resurging risk-on environment? And if they're piling into the same things that are already working, that's sort of defensive. That's like, I don't see anything else worth putting money into. And so I'm going to keep double fisting NVIDIA and Microsoft. And I don't know that that spells a good environment for risk assets, for risk taking. So yeah, the other thing is, like, would it be the worst thing if we took a 2 to 5% breather here at 6,000? Would it be the craziest thing? I don't think so. And the whole world will say, oh, you know, it's because of this spat and whatever. It's because of these tweets. Maybe they'll say that. I think we've been trading sideways for like a month, with 6,000 being the top end of the range and 5,800 being the bottom end of that range. Yeah, by Broadcom. That's another one. It doesn't have the same weighting, but like, look at this stuff. Or how about some more Palantir for you junkies out there? Oh, what? I did not see this. I didn't look at Palantir. Oh, that's how much stuff was out there today? I didn't even look at Palantir one single time to see that 8% discount. Interesting. Circle ended up trading up to $50. Oh, it got to 103. I did not see that. I think at $50, I had gone to bed to get some shut eye. Wow. It opened way higher than that too. 68. That's crazy. You know what my first thought was? So when the amount of shares that they were trying to sell at the beginning, what was it, like 24 million? I think they were trying to sell on their IPO 24 million shares for like 600. All they were trying to raise is $600 million, which I thought, like, that's not a lot. And then they're oversubscribed, obviously. This is like a Nike trick. When you put out a shoe, some special edition shoe, and you don't put out nearly enough, so you create this artificial shortage, so you get a nice frenzy to the upside. The only thing I kept thinking of was, like when they said 24 million shares for $600 million, I'm like, that's not a lot relative to what this company represents, which is 27% of the stablecoin market, or 27% of the market share. And then they increased it because they're oversubscribed to like 34 million. So now they're raising like $1 billion with 34 million shares, which still didn't seem like a ton to me. And I looked this up. Get this off the screen. Just like, I wanted to see the last 25 unicorns. See if I can put this on the screen. Like what they were raising, what their valuations were. So I used Grok to do this. Put this in front of all of you. So here's Circle 2025, 24 million shares, which is their initial offering. They were trying to raise in the ballpark 600 to 700 million. And that's how the shares offered relates to like some others. 49 million for CoreWeave, Chime at 32 million, Amanda, let's not go over the small ones. Instacart 22 million, Airbnb 50 million shares, raised 3.5 billion. Palantir was 475 million shares. Uber 180 million. So like my point was, when I saw this number, Snap was 200 million, like relative to what the demand could be on a stablecoin offering and in this administration with this digital asset backdrop, I was like, that's not a lot. And when I was reading stuff, indication of interest somewhere around $50 this morning, I was like, yeah, that makes sense. I'm like, this is going to be I never said this on air, so, maybe there's some hindsight bias creeping in here, but some part of me this morning, which was your morning, which is my last night, I think this could be an old school IPO. Like the old school sort of like year 2000s IPO. When you weren't just exit liquidity, when if you bought the IPO, you actually got some upside appreciation. It wasn't just like venture capital dumping on the public and you were within the next couple of months going to see a 30 to 80% haircut. Like this could be an old school IPO. And so the fact that this thing traded up to 103 and closed the day at 87, I know it's a pretty good sign. eToro's up. What eToro's up like? What's theirs? I always forget their symbol. eToro, that's right. They're up like 25%, are they not? Ooh, they took a hit today. It kind of dragged down a little bit. But I think Klarna just filed in March. There's a lot of people that want to come to the market. Looks like traditional finance not doing as well as the stable coins. That's crazy. Good for them. Get ready, folks. It's either stable coins and it's either stable coins or CBDC. Which one? Choose your fighter. AI Gone Wrong says, I'm sold, Vic. Gonna buy Circle tomorrow. Well, I think you missed my point. I think you missed the point. They IPO'd, the placement of these was like $31 a share. So if you got in on the IPO, you got this somewhere around $30. And today it traded up to 103, closed at 83. So my point is, in recent history, there haven't been a lot of these. A lot of the times, some of these underwriters are just struggling to prop these things up, make sure they keep their IPO price on day one. I have no idea where it goes from here. I don't know that you're getting a great price at 83. At 31, that sure was a hell of a great price, obviously. Palantir buy the dip, Vic. See, this is the thing. You always want it until it dips. 120, I'm good. If they give me some decent vol, I can sell some puts far enough away to get a price that I wouldn't mind holding. Maybe I can. I think tomorrow, you just sold me. I think tomorrow maybe I can start selling some teeny tiny, some super chicken puts. I think I'll do that. Noah, you just, if this trade doesn't work out, I'm blaming you. Apple is just a bet they will continue to buy back stock with their cash flow. They have done nothing for years. Yay, a skinnier phone with a slightly better camera. Yes, I mostly agree. I agree with a lot of that. I do think, though, that I think there's tons of value in the network of their devices and their interoperability that they have yet to capture. I'm really interested to see what Sam Altman over at OpenAI does with John. I don't know how to pronounce his name. John Ivey is how I always pronounce it, but it might be a little bit different. One of the design geniuses that worked with Steve Jobs to develop the design for a lot of the products that you guys use today. I'm really interested to see what type of product they're coming up with. And I think it's very smart for them to do this, Sam Altman, for him to come up with a hardware to go along with new software modality. I think otherwise you give Apple and Google a lot of power. I think Facebook ran into the same exact problem. You create a great service. Well, that's great. Pay the tithe. Apple says, we want our cut. Google says, we want our cut. And you realize you're sort of limited in your ability to grow until they went outside of that world. And that's why they got into the hardware space, right? That's why they got into Oculus. That's why they're getting into the Ray-Bans and the glasses. So I think Sam Altman's really, really smart to start that process early. I am curious what type of device they come up with. I'd be kind of bummed if it's something as predictable as glasses, though. I think that's logical. Brian Watson, hoarding pennies. I'm telling you. Shiny Ive. So it's Ive, not Ivy. All right. All right, my friends. I think I'm going to wrap here. So I guess my thoughts in summary. I am still positive deltas here in the market, but at any point I reserve the right to hedge some of my positive deltas tomorrow. I'm a big old chicken. If I was smart, I would just do it now, take the emotion out. I'm probably going to end up panicking and doing it when we're already down 80 basis points or 1%. So I'll figure out what I'm going to do there. I also I think what I'd rather do is buy some deep out of the money puts here with vol at 18. Because I think my risk is maybe vol slides to 16. My opportunity is that the market's a bit too complacent right now. So I think I probably need to do that in my portfolio. I still have long bonds, and here's where I get myself in trouble. 114 is probably a good place to take some profit here. So I have not taken anything off. If I'm being smart and disciplined, Victor, you'll take off half the trade and let the rest ride. This happened to be the last bond rally. I wanted so bad bonds to get back to this number I had in my head. I forgot to trade the numbers on the screen. So I've got 117 fixed in my brain as some hero's call. But in reality, getting back to 114 is good enough. I probably need to take half the trade off. I just talked myself into doing that. And then silver, I would say like I took off anywhere from 50 to 60% of the deltas in silver. Going to let the rest ride, play with house money. And Bitcoin, I haven't figured out yet. This was a really nice pullback back to 100. I can't figure out if I want to fire more or if this is sort of the end of this run. And people are going to find more confidence in the long end of treasuries. And if so, maybe that puts a short-term dent in Bitcoin in the short term. So I'm sort of frozen right now with some long Bitcoin deltas, some long trading deltas at 104 and change, wherever we are, 102. I'll figure out what to do there. I don't know that I have a great plan right now. Luckily, the deltas are small. All right, everyone, hit the like button on your way out. This is a Synthetic Friday for me. I will see you back here next week. Appreciated the conversations this week. Appreciated the dialogue. If you want to get a hold of me or watch the tweets of a madman, you can catch me on Twitter or X, whatever you call it, at Victor Jones. The Owen Jones is 0 because I like to be difficult. I will remind all of you, if you don't like that big, beautiful bill, or if you do, quite frankly, if you want to exercise your voice, it's the only thing I'm saying, you can do what I did, which is text CALL, CALL, to the number 50409. A bot will respond, ask you your address, you tell it your address, and it will respond with your senators, all of your representative contact information, which will include your senator's contact information. So there's one way, we can just scream about this stuff in the comment section. and on social media or in our daily lives, or you can at some level try to have, however little, an impact on the political process. And this is one way. Text call CALL to 50409 for your representative's contact information. The big beautiful bill, as it is named, is in the Senate. So you want to look up or call your senators and voice your opinion. You can also write them an automated letter through other means, but I don't know. I'm old school. I get on the phone. I'll see you back here next week, everybody. Same time, same place, same great network, only on Tasty Live. Until then, peace.